here for the earnings call. If you're watching this at a later time, that's fine. You won't have to miss it next time. Just fast forward to the earnings call or enjoy the show. My name is Dave. We are momentum traders, but we love everything stock market. So if you're a nerd like I am, hit that like, hit that subscribe button so you don't miss any more earnings like this. And then, of course, we also have meetings. We have meetings every Wednesday in our Discord meeting. Let me mute myself. Dave. We are not going to argue. Traders, but doesn't sound bad, but we want to make sure we can hear the real me, not the AI me, the real me, baby. So anyway, guys, if you are ready for the earnings are coming out in about 15 minutes. We decided to start a little bit early here. I hope you guys are ready for an awesome show. I am happy to be here. I hope you are doing well. I know yesterday, after a huge market pullback, a lot of people did get hurt in that, but as long as you were managing risk, you should have came out on top so you can trade another day, or maybe you were on the short side and you capitalized beautifully off those GDP numbers. Anyway, we'll see you in just a second, baby. Let's go. Well, we are here for two reasons. We got Nike earnings coming out, and then, of course, we have FEDEX coming out as well. Both some big boats in the overall market. The thing is, when we look at the overall market and we look at Nike, you can see it's been on a very clear downtrend for quite some time. And you know what my grandmother always says? Don't mess with those girls below a 200-day moving average, and that is exactly what Nike is. So what we are expecting, or at least hoping for this big boat of a just do it company, is to get above that 200-day moving average after earnings comes out. So as I want to prompt everybody before the earnings starts coming out, I do not play earnings. We do not gamble on earnings. But if we see a significant area of support or resistance, we might play after the earnings comes out. So we want to see it come out. I might throw in a stink bid in case it comes all the way down, smacks into an area of support, or a short where it may smack into resistance. Regardless of how I play it, it's how I play it. It's not how you're going to play it. Everybody likes to play differently, and we all have our own ideas. So just keep in mind, I am not trading before earnings. I'm only going to trade after earnings. Beast Stewie in the building. Dan, Bob, what's going on, baby? It's good to see you guys. We have an awesome start to this show. I'm feeling good. I'm feeling good, man, and I'm just happy to be here all together. We also have the questionnaire. David Worrell asks, I am here for, is it the Nike earnings? Is it the FedEx earnings? Either way, we are going to get both of those earnings up at the top when they come out for you, and it's going to be an amazing thing. We also push this out to everybody. We're on that Twitter, we're on that Facebook, we're everywhere, baby. So if you want to follow us, click that link tree down below. You can follow our awesome swing trading strategies group on Facebook. There's no fluff there, there's no spam, there's no nothing, and it's absolutely free. All you gotta do is pass a test. Make sure you're not a bot, make sure you're not a scammer, because our monitors are constantly and very vigorously monitoring each and every one of you that come in. So as long as you meet those requirements, you can join. You just no spammer, no bots. That's all it takes. So here's Nike on the daily time frame. If you're looking at this, it's just on a clear downtrend. It's on a clear downtrend. The only thing that I can give Nike some props for is we have at least a lower low here, a new higher low here. If it can hold this area, I think we could go higher, and I really would like to see Nike go higher. Of course, I don't know all of the backboards, all the stipulation that runs with Nike, but one thing I will say is that this here, ladies and gentlemen, was the COVID relief rally right here. Okay, this is when we started printing all those tendies to get out of the COVID slump. It is sitting below the relief rally of that COVID slump. There's the relief rally. Right now, we are trading below that relief rally, below a 200, below a declining 200-day moving average. So we need to get something to get the investors excited about Nike. And if they can do that, whether it is with their double beat on earnings, if they end up having something like that, you know, or if their future outlook on Nike looks wondrous, something that the previous thoughts and expectations, it needs to blow those expectations out of the water, And then Nike might look a little more fruitful for the savvy investors. So we're going to see very soon. What's up, Yosef? My man, Yosef's in the building. Yosef had a beautiful call out today. We'll go over that in just a second. But I wanted to just touch on FedEx too, because that's what we're here for. So FDX is FedEx. And if we look at the FedEx on the daily, you can see it is the exact opposite of Nike. Okay, the exact opposite of Nike. So when we are looking at something like this, Nike, NKE, very clear downtrend. I even drew it out so you can see it, very clear downtrend. You could even finish drawing this out if you wanted to. And then of course you have your 200-day moving average, which is this teal line. A lot of your longer term investors look at this as, you know, an area of whether you should hold or an area of whether you should sell. In the long-term investing business, this 200-day moving average is very, very well looked upon. So keep that in mind. If we're below a 200-day moving average, my predecessor, I shouldn't say that, my mentor, I shouldn't say that, but one of my favorite investors, William O'Neill, he actually spoke that he doesn't mess with anything below a 200-day moving average. It's showing obvious downturn. It's showing obvious trend down. And remember, guys, the trend is your friend. If you're going to long something, I love to see those 3 new higher lows on a daily time frame. Now you can see it across the map though. So here's the daily. We can put this on the weekly. You can see this is an even more clear downtrend. And if we throw this on the monthly, so we have a very broad spectrum, you can see right here that this is a very deep curve back to a monthly, 200 monthly day moving average. So will it create a low here, start to create new higher lows on the monthly, weekly, and daily time frame so we can see for ourselves whether it's a safe area to get in the near future? Well, I think it starts with earnings. I think it really starts with today, because today, if we zoom in here now, we can see it needs to hold some form of base. If we're going to try and hold the 72.65, we need to show a new higher low. And speaking of new higher lows, because we have our low, our new higher low, if we can create this and make this a new higher low, one thing that just came up today, I got an email back from a gentleman. His name is Dan, Charting Man Dan. If you guys aren't aware of who Charting Man Dan is, I'll just bring it up right now. So he's with the Chart Guys, and I reached out to him in one of his videos because I've been watching him for a very, very long time. Charting Man Dan, and he's got Laura, I believe her name is, on here as well. Awesome, awesome dude. This is where I learned the new lower highs, new higher lows kind of pitch to help identify whether or not we're in a bull, if bulls have control or if bears have control. Take a look at this guy. I learned a lot from this guy. I love his analysis as well. So go to the Charting Guys and subscribe. He's got over 190,000 subscribers. I messaged out to him because I love his work. I love what he does. It's free education. He also has some things that you can pay for, but the beautiful thing about Charting Man Dan is you can get so much free from him. And that's what we're here. That's what we're here doing too. We're a free educational resource where we all can learn and get better. If you can get behind that, hit that like, hit that subscribe, and of course, go to the Charting Guys here and hit that like and subscribe too. We are a small community, and he reached back out with an email and said, hey, we'll have a chat soon. I like working free, educational, small YouTube channels. Maybe not verbatim is what he said, but he said, Dave, you're amazing. Let's work together. Let's become millionaires together. I'm just kidding. But awesome guy. Give him a like. Give him a subscribe on his channel, please. Even for messaging me back. I mean, the guy is probably so extremely busy. So let's take a little peeky gander of what we got going on now, guys. So Nike clear downtrend and Amazon clear uptrend. So I'm sorry, not Amazon. We're looking at FedEx. So when we take a little peeky gander at FedEx, you can see here a very clear uptrend, and we have an area of support that you can see I drew out in red here at 270. We want to see this 270 hold. We want to see it hold. It's kind of a breakout area in a sense where this finally broke through and held above it. Now that it's holding above it, we want to clearly see that this trend hold, this base holds, and then it can continue higher. So this is a clear uptrend, and I think we're going to get a little bit more information when it comes to earnings. Does it gap back down, prove that this trend is still holding strong and head higher? We will see very soon, just trailing below that 200-day moving average. It is getting warm in here. It's time to take off the sweatshirt. OnlyFans at Dave Worrell. I'm only kidding. I don't do OnlyFans, but I will sell pictures of my feet for money. I'm not too proud, so I'll do that. I'm only kidding. I'm only kidding. Okay, I'm only kidding. Private message me though. All right, so FedEx. If I was a gambling man, I would say FedEx is going to be volatile. It's going to be volatile. Which way is it going to head? That's the real question. I would expect this thing to try and hold this trend. So it's kind of diddling in the middle right here, where here's your base at the top that it can't get above 305. And you see this trend here where it looks like it's going to try and hold this 270. So if this thing does really pull back onto that 270, we might see a bounce there. It might be a great risk reward area. I don't know if you like playing those type of trends. I like clean bases. So see how this one's kind of chopping through it, chopped above it, chopped back through it. It's not that clean. I like to see something like a Tesla, you know, where we have a very clean basing break right here. You can see how clean this was right here at this 360 area. Called it out in the Discord and still holding on to it. It's crazy. You know, I'm waiting till it closes below the 10-day moving average. I don't care what's going on in the overall market, but Tesla's still holding as the overall market is still below a 50-day moving average. If we look at the NASDAQ, which is leading the overall market, you can see it has just taken an absolute beating to the sell side, now getting below that 30-day moving average. That has been holding true for quite some time now, that 30-day, for about 3 months, 3.5 months, give or take. It's been holding that moving average, and you can see now that we're starting to lose it. But guys, we have about 6 minutes left to go, and we are going to have ourselves a beautiful earnings coming through for not only Nike, but for FDX, FedEx. It's going to be very interesting. I know a lot of people, they say, you know, well, around the holiday times, well, FedEx is going to do better because it's around the holiday times. They're, you know, they have a lot more money coming in. They got this, they got that. Well, you guys have to understand the market is forward looking. Okay, all of that for this Christmas has been priced in, if not 6 months ago, a year ago. Okay, so you have these forward analysts, these forward thinkers, and that's what the market does too. It's forward thinking. So to say, well, FedEx should do well with their earnings because it's Christmas time. Well, they're expecting earnings to be good. They're expecting to blow things out of the water, you know? So with FedEx where it's at right now, I think everything's already priced in personally, and we'll see which way it wants to move on the needle here. I think the biggest thing is going to be the forward guidance on FedEx. For Nike, we really need any kind of good news. I mean, anything's going to do good, right? I think Nike's kind of too big of a conglomerate to fail, but at the same time, if they don't keep up with the times, these youngsters don't give a crap about Nike, you know? I don't know. What do you guys think? Do people still love Nike as much as they used to, or is it kind of the old, out with the old, in with the new, you know? And also, Nike is a conglomerate, right? They're not just selling Nike products. Do they own other companies that might be selling well? That's a real question there, because I don't know too much about the full scenario of the clothing apparel. I know they got shoes. I know they got clothes. They got equipment for sporting equipment and stuff like that. Very well known. But you know, where are they at? Because right now they are not a leader. They are definitely not a leader. And if you guys are listening right now, can you tell me who the leader is? Tell me who the leader is in apparel. Take a look at ON, Nike. Take a look. Is it Decker Outdoors? You know, which apparel line do you think is actually in the lead? Let me know. Let me know in the chat. So now that you guys both know that Nike's on a downtrend, and we have obviously FedEx is on a clear uptrend, we're going to zoom in now. We're going to get ourselves in and more acquaint with what's going on. So we're going to do the 5-minute time frame. Just keep in mind when we're looking at the 5-minute time frame, the overall time frame, FedEx is on a daily uptrend, a very clear daily uptrend. I know it looks bad on the 5-minute. And then of course, when we look at Nike, keep in mind that it's on a very clear downtrend, even though today it's looking really good, okay? So just keep that in mind, guys. And of course, if you are with me and you are new, my name is David Worrell. Thank you so much for joining me. You guys are awesome. Thank you for being here with me. We got earnings coming out for both FedEx and Nike. We're going to have the earnings call coming on. We'll be doing FedEx right away. It'll be at 4:30, so 30 minutes after the close. So within the next 30 minutes, we can pull up a timer right now for you. Earnings call, we're going to do at 4:30. No, that's saying 4:30. Okay, we got to do 30 minutes. And then I need to change that. All right, now we got the timer up. We're good to go. We're started. So in 30 minutes, guys, we're going to have the earnings call come out. But right now we are waiting for the earnings. The earnings are going to be coming out for both FedEx and Nike. Right now on the 12 votes, it's split, guys. It's 33% Nike, 33% FedEx. So I don't know who to watch first or which news to give you. But you know what? That's the beautiful thing about having multiple systems is I can watch it on both. So I will bring over here. We got FedEx right here. I'm just going to go ahead and bring up the news, make sure we don't lose that. And then, of course, I will have, maybe I can squeeze this in right here for everyone. We are going to throw up right here the Nike, and that way we can see those pop up here, and we can see how everything's moving along for that. Okay, just need to switch this to make sure you guys can see. Let's see. All right, we're gonna have to deal with that for now. And we'll see the news come up there. I'm gonna pull this over on this side so it doesn't get too confusing. All right, guys, here we go. We got less than 1 minute. We got about 30 seconds, guys, 30 seconds, and we are going to close the day. It looks like red on the overall market, but that's a-okay. What we are here for is the FedEx and the Nike earnings. Thank you so much for joining me. Leave a like, hit a subscribe, leave a comment in the section below. What do you guys think is going to happen here? I think it's going to be interesting. FedEx always gets a little bit of volatility. Nike, I would love to see a turnaround. I love to see a good turnaround story, especially if we can identify that stage 2 uptrend. You know, if we can identify out of a stage 1 into a stage 2, it's going to be a beautiful thing. And there is the closing bell. There it is, ladies and gentlemen. Absolutely amazing. Happy days, even though we did have a nice pullback. Still holding on to what we can with the overall pullback. As FedEx is coming out right now, we're waiting to get the news on FedEx. We're going to go switch over to Nike here. Let's take a little peeky gander. Nike as well. Just waiting on those earnings to come in. They should come in very soon, guys, so we will stay in tune. Nike looks like it's getting a little pop there. Nike's looking good here. A little pop there for Nike. Maybe I can give you guys a little bit more room here. We don't need this much news up. There we go. So there's your Nike, and then we'll swap back over here to FedEx. All right, so FedEx getting a little pop here. Remember, FedEx earnings call is coming out in 27 minutes. We're waiting on the earnings to drop. We're getting a little pop here. Right now, FedEx is trading at $277. It closed at $275.85, now trading at $277. So we're seeing a little pop in volatility there, a little volume after hours for FedEx. And we're going to keep an eye, of course, on Nike. FedEx just gave everything back. We're getting some volatility for Nike too, a little pop. Still, no earnings have came out yet. We are waiting, and we are ready, baby. FedEx gave all of that pop back. We are definitely starting to get a little volatility. Nothing like we've seen in Lululemon or like we've seen in, what was our last, CrowdStrike was a good one. We did that one. We've been doing earnings left and right, guys. It's a lot of fun. We like to see the volatility. We like to see where these end up, because a lot of time these big conglomerates like you're seeing, like FedEx or Nike, they really can start to change the sector around. It gives clues. It gives clues into the overall market. So it's nice to see these. FedEx, oh, there's a nice little pop. FedEx back up, $281. Now we're getting some volatility, baby. There it is. FedEx jumping well up. We're almost to the $300 area. FedEx just rip, tater chip. This thing is just freaking going higher and higher and higher. 301.62, 301.50. Can we see it go higher? Wow, what a move. We're going to zoom out on the hourly here to get a better understanding of what's going on. We're at $300 even, coming right up into this area of resistance, guys. An area of resistance here. One thing that I will do is I'm just going to take a little share here, and we're going to do this in the good till close after hour, and we're going to try to sell the ask on this. Just one share. We're going to see what happens here. Maybe it won't let me. Nope, hard to borrow. Very interesting. So FedEx being such a big conglomerate. So what we're going to do is we're going to paper trade this. It won't give me any shares to short here. So very interesting. But I just wanted to point out on the hourly, you can see the resistance. You can see we're back up to where it dropped off. Very interesting area. I was just going to take one share to kind of show you guys what you can do after seeing something like this. So earnings came out, boom, we're here. They obviously, the algos obviously take over, and now our numbers are coming in right now, guys. So I'm gonna go ahead and find a way to post these right now. We're keeping an eye on Nike. I don't have anything just yet for Nike. I could switch over on this, but right here, look at that big pullback now, guys. Now you can see it. Big pullback here. Why? Well, right there's that red line, that 305. It's a psychological area, that 300 area, and it's an area of resistance. That is why I tried to take a short. Unfortunately, they were too hard to borrow, and now we're breaking up above that 307. It just smacked into 309 now, 309.75, 310. FedEx is clearing new milestones here as it breaks through that area of resistance. It's absolutely beautiful. Now, can it hold above this? We're zooming back out on the hourly so we can see the overall time frame. It cleared now. It cleared these highs and now starts to pull back. There is a lot up top there. There's a lot of people selling up there. If it can get through and continue to run higher, that's going to be absolutely beautiful. Let me read these numbers to you. We have the EPS 4.05 beats the 3.91 estimates. The sale were 22 billion. It missed its 22.11 billion estimate. So we had a beat on the earnings, I'm sorry, the earnings per share, the EPS, and the estimate on the sales, we had a miss. So I'm going to go ahead and do my best to get these up here for you. That way you guys can see them up at the top. We're going to switch to Nike really quick here, guys. Do keep in mind, in about 23 minutes, we're going to have the earnings call come out. When that earnings call comes out, it's very important that we stay attentive. We pay attention to the questions that are asked, especially towards the end there. Nike, we are not getting any news just yet for Nike, so we'll come back. We're going to stay focused on FedEx right now because FedEx is absolutely ripping, but it's coming right into this area of resistance. We took a paper trade since we are not able to short this stock currently. It's saying that you're not able to borrow it, which is crazy to me because FedEx is a huge market cap. There's so many shares in this. How is there not available shorts to share? So that's very interesting. I've never had, or I shouldn't say I never had that issue. You usually have this issue on small and mid caps, not mega caps like this. So FedEx now sitting at 307, trying to get through this area of resistance. Let me zoom out on the 4 hour now so you guys can still see even clearer. If you look here, we are at a huge area of resistance, but it looks like it's really trying to get through here now. Okay, so the FedEx sees F25 adjusted EPS of 1645 to 1745, including the MTM adjustments versus prior guidance of 1790 to 1890. It sees the FY25 adjusted EPS to $19 to $20, excluding the MTM adjustments, and business optimization costs versus prior guidance of 20 to 21. So this is all really good news for this. Let's see if I can do this here. We're going to try and get these numbers up for you, but I'm zoomed out here in the 4 hours so you can clearly see why I am calling that resistance area out, but it's starting to look like it's poking its head through on volume as well. So it's a very good sign for FedEx. If you're watching FedEx, if you're in FedEx, this is why we pointed out this clear uptrend. We go back to the daily, the weekly, the monthly, and you can see it's a clear uptrend. That's why we had ourselves focus on this. It's on an uptrend. Good things could come. We gave you two options here. One, it comes back and bounce and proves itself here, or we start to find a new higher low here and it continues higher. It decided to take that path. Now, the question is, does it stay above this $300 area, or do we come back down and create a new higher low? That's the question here, folks, because this is the breakout area and it has broken out. That's a beautiful thing. I would just be holding this short until tomorrow. It would just be that single share short to see if it actually starts to break down here. And then in the morning, we're somewhere maybe around the 300s. Of course, I'm rooting for FedEx to go higher because it is a huge conglomerate. We want to see FedEx go higher because it is in a lot of your bigger banks. I think S&P 500 is probably in the S&P 500. I would have to look that up. But let me get these numbers up here, guys, before I get too distracted. All right, here we go. Nope, not that one. Bear with me here, folks. We're just trying to get the numbers up here. Got to get them numbers up, baby. And we also want to check Nike, NKE. We have 20 minutes, guys. 20 minutes until that earnings call is coming out. Nike hasn't done anything. We have not gotten the earnings to be released yet. You can tell it is a little volatile in the after hours right now, but FedEx seems to be the ideal watcher here. Lots of eyes on FedEx in this area of resistance. Trying to get these numbers up here. Just bear with me, folks. We're doing the best we can over here. Why won't it let me do this? We'll try that. We will try that. Oh, there we go. Okay, we got this, guys. We figured it out. No big deal. All right, there we go. We got the we have got the FedEx earnings up in the bar above. So if you have any questions, please ask, throw it up in the chat. B. Stewie says, please smash that like button. Absolutely. FDX is ripping, sir. You are darn tootin'. If you guys haven't already, do me a favor, take a little peeky gander at my screen. It's important and intuitive that you are live. If you are here, click that live button there. And then, oh, you can't see it, can you? There you go. If you are back here, make sure you click this live button here so you can see and hear the earnings calls as it happens. And then, of course, smash this like button, and then there's the subscribe button. You're more than welcome to click it. I'm not going to force you to, although I wish I could. I'd probably have a lot more subscribers. Hit the subscribe button. All right, guys, we are jumping right back into it as FedEx still holding above that $300 area. Very important area. We are on a 4-hour time frame. I know it is fun to zoom in and look very, very close into the 1 minute or the 5 minute time frame. But with earnings popping out and coming out this volatile, we want to see where we are at in accordance to the overall resistance. You guys can see I have it marked out here for you. We could even adjust this, bring this all the way out here so you can see, or even better yet, we could do, you know, one of these. So you understand that it is not just a line, but it's more of an area. We can call this the danger zone. And it is currently in that danger zone, that area of supply or an area of resistance. And you can see here, it is getting smacked right back down. Okay, so we're going to see if FedEx wants to linger in that area, because if it does, the longer it can stay there, the longer it can hold there, the more it starts eating away the supply above it. Okay, just think of like piranhas trying to eat through it, right? The more food it's being fed, the hungrier those piranhas, the crazier they get, as long as those piranhas make it through. Is that even a good analogy? I mean, is that a good simile? Like using piranhas to eat? Come on, Dave. So many different things I could use right now. But anyway, there is a ton of people selling into this area right now. Lots of demand. Clearly, they liked the earnings. They liked the earnings. But the question is that supply going to be breached by the demand? Okay, the simple war of supply and demand is going on right now above that 300, and it looks like we are starting to head a little lower. Just as we talked about, there is an area of supply there. That's why we took a paper trade short, because it would not let me borrow the shares. Womp, womp, womp. 16 minutes until the FedEx earnings call. It will give us a little bit more insight into the future of this humongous conglomerate, this delivery conglomerate. Absolutely amazing. It's been around for quite some time. Obviously, you know, Amazon is the clear leader in this sector. Amazon is more than just one conglomerate, of course, but it is still, in my eyes, considered the leader in this distributing area. You can argue with me all you want. I'm fine with that. Tell me why I'm wrong, but do it in the chat and do it in a kind way. Don't make me cry on stream, please. I would hate that. But things are looking really good. We're going to go look at our friend Nike really quick. And now Nike is not got anything going on, so we're going to wait. We will see AMZN. I just want to see how it reacted, kind of pulled back on that. So FDX, we're going to wait here, and we're going to wait for the overall the earnings call to actually come out. So we got about 15 minutes. I'm going to go on here, and I am going to check my email. We need to bring up the Q4 Incorporated. Q4 Incorporated is where I have to go to sign up to get all of these earnings just for you. I do all the work just for you. I make it easy. I make it fun. I make it entertaining, and we all do it for free. So if you can get behind that, hit that like, hit that subscribe button. Of course, we have a YouTube that teaches you how to trade trend and base breakouts. It gives you a template, so you at least have a process, a learning, understanding, a way of actually how to trade. Go ahead and click that YouTube, check out that homepage, and let's bring up these FedEx Q2 earnings. Let's see, can we webcast link? There it is right there. Okay, I gotta wait. It's gonna be 15 minutes before the startup time, so it should be. I should be in here. Webcast link. Yeah, I should be able to hop in here. We'll see. We'll find out really soon. I hope everybody's doing good today. I'm feeling good. Oh man, I tell you, the past couple days of jiu-jitsu, I was getting my butt handed to me, man. Absolutely just humbled by some tough dudes, man. We got some really tough people in our gym. It makes everybody stronger. Absolutely love these guys that I'm working with in the gym. The Nike earnings at the top, I gotta look myself. Actually, the Nike earnings is gonna be at 5 o'clock, brother. No effort AI videos. Do you make AI videos? We'll have to check those out. But yeah, that's gonna be at 5 o'clock, I do believe, and FedEx is gonna be in about 13 minutes here. I think we're gonna listen to the FedEx earnings as long as it stays juicy and frothy. I don't think we're gonna be switching too much into the Nike, but we'll see. It does look like 67% of you are here for the Nike earnings, so we will keep a very close eye on it. FedEx did come out. They did show that things are frothy. They're holding above that $300 area. So we will keep a very close eye on Nike. I noticed that you guys, a lot of you are in here for Nike. You got 24 votes on the chat right now. 67% say you are here for the Nike earnings, and now we are out. I'm glad you brought it up. I'm glad chat's here for the Nike earnings, because bada bing, bada boom, it's making money real soon. Up to $83 right now. Nike reports its 25 fiscal earnings. Bada bing, baby. Let's go. Okay, here we go. I'm going to start reading them to you as they come in. Watch the charts. We're up to 83, 89. They are coming in hot. Lots of news here, guys. EPS 78 cents over. So it's doing well. I want to get to Q4. Here we go. Asian Pacific Latin America revenue 1.748. Nike beats. Africa beats. Oh my gosh, they are everywhere. What a beautiful thing. Okay, I'm going to read this out loud to you guys as we are sitting at $84.02 right now. $84.02 for Nike. The second quarter revenues were $12.4 billion, down 8% on a reported bias compared to the prior year, and down 9% on a currency-neutral bias. Nike direct revenues were $5 billion, down 13% on a reported bias, and down 14% on currency-neutral biases. Gross margin decreased 100 bias points to 43.6%, and diluted earnings per share was 0.78 cents. Wow. So not looking the best on that report there, but I will say this, it seems like they ripped tater chip to the north side. So no effort. You came in just at the right time, brother, because the Nike earnings did just come out, and it looks like in some areas, though, they beat, and some not. They obviously have so many different estimates because they are all over. They're in Europe. They're in Africa, they're in Asia, they're everywhere. So as this news continues to come in, I'm sure Nike will continue to be very volatile. FedEx killing it, Nike killing it. I want to see how the overall market's taking some of this news, as it's not taking it well. it's still down here at its lows in the past 3 months. So very crazy to see. Nike, wow, as Nike still continues to rip tater chip. Is this going to be its daily downtrend break? Is this going to have enough juice to get this thing up off the ground and continue higher? That's really great to see. Direct revenues, $5 billion. It's down 13%. We're seeing a lot of bad news here. So it's very interesting to see this pop. The question is here, when we look at this, let's go back here on the daily, and we really line up all of these peaks here. I want to see right where this is going to be. Let's line up all of these most recent peaks. See where I'm doing this, just to try and hit as many as I can here, and then we'll zoom in here on that 4-hour time frame, and we'll say, hey, where are we in relations to this? Okay, so now that we look at the 4-minute time frame, we can adjust this to make this look a little prettier here. That's not as pretty. Now it's not letting me. But you can see here, it really does look like this might be the start of something new for Nike. I do like the look of this. I would love to see this thing start to climb higher, because I love to see things coming out of a stage 1, going into a stage 2, and then starting to head higher. And if you don't know what a stage 1, 2, 3, and 4 is, it's really simple. That's how we determine the market direction of a stock or an ETF. And you can see here on the overall market conditions of this on the weekly, we are just in a stage 4 downtrend. We're waiting for this to get a stage 1 and then start its stage 2 uptrend, kind of like this over here. Okay, so we are clearly still in that stage 4 decline, and we want to see this thing start to shape up. And right now, as of right now, we are trading at $86. So that brings us all the way up to here on that daily time frame. So that is a great start. The real question is, how much of this is it going to hold? How much is this actually going to hold? So it's very interesting to see. Q2 Nike brand revenues at $11.95 billion versus Visible Alpha's analysis consensus of $11.7 billion. Conserve revenue of $429 million versus the consensus of $470 million. So the gross margin decreased 100 basis points to 43.6. Nike taking immediate action to reposition our business. This little piece came in here. Clarity, priority to return sport to the center of everything we do. So they're trying to take sports and they're trying to make that the center of Nike right now. So maybe they went too far into the apparel region of things. So very interesting to see all of that come up. Time to get a quick sip of water, and we need to check FedEx really quick. We're going to kill the lo-fi music just so I don't forget. Click this webcast link. Let's see if FedEx is ready to rock. And then we can switch over, guys, to Nike's earnings. Once they start, they're going to be starting at 5 o'clock. So we'll see what FedEx is doing. I'll get the Nike call set up on the side. And as long as we have more votes for Nike than we do for FedEx, then we will continue to listen to Nike. But we'll obviously listen to FedEx while we're sitting here waiting. And FedEx is below that $300, that psychological and area of resistance, that area of a sell-off, that's resistance area, excuse me, the supply area is that above 300, as we were talking about earlier. So we'll keep an eye on Nike as FedEx still trading below that. Is this going to be the start? Ladies and gentlemen, what do you think? I want to know in the chat. Do you think this could be the start of Nike's stage 2 uptrend? We are getting new higher lows here. This would be the first higher low right here. This would be your second, and this would be your third. That is my question, and I'm very, very serious, because if Nike wants to start turning around here, I want to be a part of it. I want to be a part of its turnaround, of its new success story. Or is this a Warren Buffett cigar butt where we're going to get one last puff before it fails? Lots of good questions here, lots of thoughts, lots of things that we can provoke our minds to do. We can keep a closer eye on it as it continues to create new higher lows, and we can take a tasty little trade in it. So we'll see very, very soon. I'm waiting for the FedEx to let me in, let me in. They said they were supposed to start FedEx Q2 FY25 earnings call. Let's see. Let me make sure. We want to make sure. Today is December 19th. Ah, I see. Okay. Let's go. We might be listening to Nikes first, it looks like, actually. They must have changed this on me. Because now it's 5:30 p.m. Eastern. So no big deal. That's going to be, FedEx will be at 5:30. So we have another 30 minutes until Nike comes out. So we will be able to go over the market while we sit here and rest on these beautiful tendies up here at 84.82. So we have some hanging out to do. If you guys have any tickers that you want to bring up, one thing I did want to bring up, Yosef actually brought up this morning. So we have this awesome and amazing guide. Actually, let me. I really want to talk about this. So give me 1 second here. I want to bring this up. Let's see. We're gonna bring Nike up. I want to throw Nike up there on the board so everybody can see this here. 1 second. Okay, there we go. Now, sorry, Dan Bob. Bob Dan, the greatest moderator live, is in the building with us tonight. I think I made it 2 lines, Dan Bob. I hope you're okay. I hope you don't get mad at me. We got the timer up here. You can't even see it. I need to restart it anyway. I think we got another 30 minutes now. A little more than the 30 minutes. But we'll just leave it like that. We do got to switch this up real quick. Bear with me, guys. I just want to make sure we do this right. So the earnings call is going to be at 5. And that will be in 36 minutes. And it will start at 5. So we will be doing Nike's earnings call. We can check in on FedEx, but I think I'll just listen to that on the side because I know you guys are here for the Nike earnings call. So we're going to get that started. We're going to make sure that everybody is ready and aware. Right here's your timer for the earnings call. I'm going to make sure it's all up and ready. Up at the top of the screen, I put out all of your earnings. It's all up at the top. You can see the FedEx earnings, you can see the Nike earnings, and then you can also see Nike where it sits here on this area. So things are looking really, really good for us. We want to keep an eye on the chat to make sure we don't have anything going on in there. If you guys want to do me a favor, while I'm running through this, while I'm keeping all this going, I feel like a DJ up here. Everett, DJ without the music. Actually, here, I give you a little bit of music here. No big deal. We'll turn the music off once the earnings pops up, but up at the top, DJ Dave has got all your earnings that you can use, that you can need up at the top. FedEx is at the top. Nike's on the bottom, so take a little peeky gander. Thank you guys for being here. We have Nike earnings. The earnings call coming out in 35 minutes. Yes, I've already set it up for you. Yes, we are all signed up. Yes, the Q4, baby. Let's go. Absolutely pumped, ready to rock. I hope you guys are too. We're going to just go back to my messages. We're going to see if we can get in here early. Might have to pull some strings here, guys, but you know, I'll get us in here a little early. No big deal. I heard they had free popcorn, so we get in there early. We're going to eat some popcorn. We'll get some butter on it, too. All right. FedEx, let's take another peeky gander. Let's see if it is still below the 300. Well below a 300 now at 295, guys, 295. This is why we wait. This is why we wait until after earnings is played, because if you would have played here, you know, well, obviously, if you would have played here, you'd be in the money if you were going green. But regardless, this thing could have tanked just as easily and then came back up here. You never know which direction it's going to go, but the direction it does will end up running into an area of resistance or support usually. And I have been doing very well keeping an eye on things. We don't really take a lot of trading during the earnings, but when you see trades like this where it's like, hey, just take one share, just have a little fun with it, you know, because you know, anything could happen with these earnings. But yeah, this would have been a nice short so far here, and we're going to continue to watch it on the 4-hour time frame. This area in the gray is the danger zone. So be really careful in the danger zone, because if it gets back up in the danger zone, it could definitely break through and go higher, because what is acting as resistance when you break through then acts as support, okay? So do keep that in mind. Especially imagine being the guy selling up here and then it goes even higher and they're like, hey, I had that down here at 275. Why did I sell at 300? You know, there's psychological backing the push higher. So we'll see what is going to happen there very, very soon. Let's see. Nike. No, so I was looking at the right one. So this is Nike's earnings at Nike's earnings is from 5 until 6 p.m. Right. And then we have, let me go back to my email here. Oh, that's Nike again. Oh, they sent me 2 Nikes. Okay, yeah, no, okay, so I have it right. Nike's at 5. Nike's at 5. Quick question, isn't it? And then at 5:30 will be FedEx. So Nike is at 5, baby. I think we're going to be all eyes on Nike here. I think you guys made it very clear what you're here for. 26 votes, 69, yes, ream and weep, 69% of you said that we are here for the Nike earnings. So I'm glad we got to do both because I was interested in FedEx. And both FedEx and Nike got to ripping. We just want to root for Nike to hold these new higher lows. At least most of its gains. We want to see it hold most of its gains. If it can do that, that's going to be absolutely beautiful for Nike because we want to see that start of that new stage 2 uptrend. If you don't know what that is, I bring it up all the time. Stan Weinstein's stage analysis, and it's a simple picture. I always bring up this simple picture because I'm a visual person myself, so I always try to use these visuals to kind of help teach and learn. If you want, this is a free area. You can go read a little bit more about this, but it's very simple. If we look at a weekly time frame, I usually can see it on the daily, but if we look at a weekly time frame, you're going to see this. You're going to see this area where it starts to base out. We call that the stage 1, and then it creates a new higher low. That's creating a stage 2, and then it bases out at the top. That's creating what we call a stage 3, and then it starts a stage 4. I can give you an example on a lot of these. A stage 3 that just happened is on NVIDIA. If we look at NVIDIA, you can see it. You can see this clear uptrend, and then you can see right here is its stage 4, and then it looks like, I'm sorry, stage 3, and now it looks like it might start a stage 4 decline here, okay? It could very well possibly do that. You have 3 new higher lows, and as it breaks this area of support, then I would consider this definitely on a confirmed stage 4 downtrend. But we still need to give it some time to see what's going on with it overall. But just keep that in mind, guys, when we're looking at something, and of course, Weinstein's talking on a weekly time frame here, so you would want to look at this on a weekly time frame. And you can see here it's on a clear uptrend right up until this point. You can see that 10 weekly moving average is starting to curl over, and so we could get a nice bounce here and make a head and shoulders on the weekly, and then continue down, or maybe it chip shapes up here and starts to head higher. I would like to see that because I know a lot of us in our long-term accounts are holding something like a NVIDIA. Okay, so back to the 4-hour time frame and back to the plan at hand. Nike now trading at $83.20, trying to really get above this trend area. That's some good water. Much rather it be a Red Bull, but hey, that's some good water. I'm going to refresh this. Let's see how many likes we got, guys. I'm a numbers guy. You know, I like numbers. I like to do good. Hit that like, hit that subscribe. We only got 6 likes and 12 of you watching. If you can hear me now, do me a favor. Hit that like button. It helps the algorithm out. And I know a lot of you guys are just stopping in. You're just here to hear somebody else talk. You want to hear what the earnings, you want to hear what's going on. Well, guess what? We need your help. We are trying to break the internet. We want to get more subscribers. We want to get a beautiful show going on. If you can get behind that and you have a heart of gold and an open mind, just hit that like, hit that subscribe button. We do all this for absolutely $0 and 0 cents. You want to buy me a coffee? You can do that. Buy a super like if you want. But that's the only thing. That's the only thing. It just keeps me up and adamant. But I got water. I don't even need that, baby. Let's go. All right, we got Dan, Bob, Dan, the greatest motor alive, have posted the link tree. If you click on the link tree, you can see right here. This is what it's going to bring you to. We got the YouTube, the Discord. Yes, it's free. Join our Discord. We are always on there at any given time. TradingView, if you want to look at the best charting platform alive, use my link. I might get a little kickback if you decide to spend some money on it. But if you don't want to, that's fine too. It's still absolutely free. All right, Q2 earnings for fiscal year 2025 is coming up for Nike, guys, at 5 o'clock. We have less than 30 minutes until that comes out. So make sure you are ready and aware. We have it all set up. We are all successfully signed in and registered for FedEx and Nike, but of course, Nike will be going on first, as Nike's just trying to stay above that trend line. We want to see it at least stay above $80. Why do I say that? Because $80 was an area of declining resistance here, and we're above it now. So to break below that $80 area is going to be a no-go for Nike. It's going to look really bad. And then, of course, if we break a new lower low and we break $76, that's going to look even worse for Nike. And you're going to see that the bears still have complete and total control. On the 4-hour time frame, if we can get above this area and create a new higher low, you will see that the bulls are actually starting to work here. Okay, so we're going to see very, very soon what happens. In the meantime, if anybody's questioning why the market went down and why we took such a hard stinking hit, because we did, guys, we are well below those big trading areas. You can see we are back down to where I was risk on. We gapped up on the news of Donald Trump becoming president of the United States of America. We were back to risk on. We held on to risk on. We made plenty of money here. And then this thing just completely took an El Duccio right through the 21-day moving average, right down through the 50-day moving average. And now the S&P 500 is lingering around these bases like some bad breath. That's not good for the overall market, but I will say this. I said it in the Discord meeting last night. This is normal. This really is. This in one day is not. But we have a lot of traders, a lot more traders than we used to have now. So when we get panics like this, it's more normalized. It's more understandable because there's a lot more retail traders in here selling out. Now, did retail traders make this big of a move? No. You had institutional ownership on this sell too. We've been extended for quite some time. But if you look at the overall trajectory of this market, you can see we are in a channel, and that channel is to the north side. So I think we are at an area of support right now. If we hold 585, I think the S&P 500 can do better. The NASDAQ, on the other hand, also took a very big rip to the sell side, but you can see just by drawing a simple trend line, you will see here that we are still channeling to the north side here. This is a good look for the overall market. So I'm not really fearing anything right now. But if we come back up and we do not breach this new high, that's going to be a very bad sign for me. If we come back up and then peak out somewhere in this area, creating a head and shoulders pattern, that's not going to be good for the overall market. Okay, Nike currently trading at $83 right now, and FEDEX, FDX, is now currently trading well below 300 at 296.03. 296.03. That's why technical analysis is key here, guys. We look at technical analysis, we plot it on the chart so we can all have a better understanding of where the resistance is. If you know where the resistance is, then you won't be buying into these emotional buys where it goes too high too fast and then you get sold off into. Okay, so this is why we took a short right here in this area. It's just a paper short. It would not allow me to actually borrow the shares. I was just going to take one anyway, so it's not that big of a deal, to show you kind of, I believe in technical analysis. I believe in the resistance, and here it is. So does this not entertain you kind of deal going on right now? But if we look at Nike here at $83.26, things are looking really good. 23 minutes until we get the Nike earnings call. What are you guys watching? Let me know. Oh, Yosef, I keep forgetting about it, but we have a leaders list, and we can run through that leaders list right now. One thing that Yosef brought up today, I thought it was awesome. He said DOCS looks very, very strong, and on the daily time frame, this thing did look very, very strong today as Doximity closed well above its 10-day moving average. And yesterday, as we broke down in the overall market some crazy amount, DocuSign held its 21-day moving average. That is an extremely bullish sign. Not just held the 21-day moving average, but it also pushed higher on volume. That's the key there. So Joseph, awesome job pointing that out. That is going to be on the top of the watch list here because this packaged software, this technology services, does not seem to give two shits what is going on in the market. It says, I go to the beat of my own drum, and DocuSign is kicking butt and taking some names. There was a few other ones that I mentioned not doing as strong. ASAN is not doing as strong today. MSTR absolutely just getting wrecked today. Bros is holding up well. DOCS holding up well. You know, there's still some very strong names out there. Our Rocket Lab holding the 21. App trying to hold the 21-day moving average. NVIDIA is kind of failing. We're not watching that one. Netflix holding the 21-day moving average. Tesla still holding that 10-day moving average. I mean, I honestly, at this point, you know, I almost want to just sell, but I won't. I will not do it. I will stick to my damn rules. Apple, AAPL, above the 10-day moving average still, guys. Meta did break down. It's below its 21. VST trying to hold. We're going to see if we get a... Oh, don't make me look at Roblox. Let's take a little look. Wow, Roblox really is holding that 10-day. Oh, I hate to see it, man. I just don't believe in the whole Roblox sensation, you know. And it is looking strong, but man, I look at this thing and I think, and here's another stage two, right? So here is the stage one right here, this long base, and here's the stage two uptrend. It started right here, it broke through, and then look, it comes right back down and retests that breakout area. So if I just draw this line across here, you can see it. It's clear as day. Here's the stage one, right? Here's the stage four. Here's the stage one. And now look at this thing. It's breaking through, came back down, retested the breakout area, showed wicking, showed a nice, cute little smiley face. Guess what? Bada bing, bada boom. You'll be making soon. So I can't short something like this as much as I'm like, oh, this is up too high. You know, the market's failing right now. I need to have a hedge. I'm going to short Roblox. No, I've tried to do that before. Roblox, no, I can't do it, right? This is not me. It's not the way I trade. This is a stage two uptrend right now, holding well against the overall market. It's really good to see. I hate Roblox. I do. And if you look at their annual and quarterly earnings, I mean, they're making money, kind of. They're still in debt, but they're trying to make money. You know what I mean? So, yeah, Roblox. Well, it's crazy to see Roblox stage two uptrend, man. That might be a buy and hold, but not something I'm recommending doing. Definitely not. Just because I have such a bad biasing against it. You know, I really do. It's kind of funny. Nike now trading at $83.74. The volatility has started to slow down here. We did get a lot of volume there between the last hour of the trading market and as of right now. If we look at this thing on the 5-minute time frame, you can see we did get a lot of volume coming in there. It's really doing its best to hold above. Like I said, that $80 area would be key. If we hold above that $80 area and show that we are holding a new higher low, that's going to be a great sensation for Nike. It might be the start of a turnaround. The question is, does it pose a good enough risk reward for the longer term investors? Is this the time that we would want to get in, or do we need to give it more time for it to play out? That's the real question here. All right, let's take a look at, I want to take a look at a few stocks that I'm holding right now. So let's take a look at Tesla in the after hours. I just want to see where we're at. So still holding well. I don't know how well that you would say that's holding, but it did bounce. It bounced off this area. This white line is actually where I sold half of my shares originally. Now, you know, we're still green massively into this trade. We're just waiting to see what exactly happens with this. But of course, we're here for Nike. Nike doing its thing, absolutely ripping up here to that 83.33. Congratulations to anybody if you did play this or you were just holding off of those lows. Personally, I had nothing that I could do or get into. My biggest trade that I've created for myself recently was VOO. After we had this huge sell-off day, I decided now's the time to buy in, right? We just gave back 3 months worth of gains. Now's the time to buy in. So I bought 10 shares here of VOO. We're down a little bit on that, but I'm not worried about that. We're down $25 total from where I got in. Here's the thing though, guys, that kind of makes me a little bit more excited. That's what I like about long-term investing. That's why I always tell you guys you should long-term invest, is because the further the market goes down, the scarier the market looks, the more I'm going to be looking at buying that long-term and then using half of my account for a long-term and then using the other half for speculative swing trading accounts, okay, or swing trading trades, okay? I'm a swing trader trading swing trades. So Nike now trading at 83.90. Let's take a look at FEDEX. We want to keep a peeky gander right back into that area of supply. Let's see if it can get above that $300 area. It's a psychological, very strong psychological area. We're going to see if it wants to do that, as Nike should be starting its earnings call here in about 17 minutes, guys. 17 minutes. So if you are here for the earnings call, hold on to your britches, baby, because the earnings call is coming up very soon. Then you won't have to hear me talk this whole time. Oh, that's some good agua. That is some good agua. This looks like I'm fancy drinking out of a bottled water, but no, it's city water. It's city water. What do you got? What, you guys drinking city water? B Stewie? You got city water out there, or you got well water? What you drinking, or do you filter it? Let me know. I know Dan Bob's still drinking Helene water from Hurricane Helene. I was just kidding. That stuff's probably salty. Too salty for you to drink. And I don't know. Was that too soon? Was that too soon? I don't know if you know this, Dan Bob, or not, but actually, the same day that Hurricane Helene came through Florida and you were battening down the hatches, we had a cat move into our house. My wife left the door open and we had some kitten, so super malnourished, just come into our house. We didn't have any pets. We didn't own any pets. We have no pets. And then we just all of a sudden adopted a cat, and oh, what should we name it? So we ended up naming the cat Helene after the Hurricane Helene that pushed her into our home, basically, you know. So but of course we didn't get the blunt of it. Florida got the blunt of it. We just got some of the nasty rain and the yuckiness out there, and it was no big deal for us here. It was a storm, but my heart goes out to everybody that had the heartache, the hardship out there with Hurricane Helene, because I know was it Harold that came through after that? I don't remember what came after that, but it was like they got a double whammy and it was bad. All right, let's see if Nike will let me in here yet. Let's see. Webcast link, let's go, baby. Not yet. For optimal viewing. Oh, there we go. Should we play the lobby music? Heck yeah. Oh yeah, there we go. Actually, I'm going to do this. Let's see if the audio still picks up. Let's see. Hold on, chat. All right, you can hear that now, right? Yeah, there you go. All right, what do you guys think? All right, cool. Earnings going to be starting here in just a little bit. Just a little bit. We'll keep it down. We'll keep it down for now until it starts, and then we'll turn it up. We'll crank that Soldier Boy, and we'll listen to what Nike has to say. I'm not even sure if you guys can hear it. Let me know in the chat if you guys can hear the background music. I'm going to also get this up on here too, so you guys can see this. There we go. There we go. All right, 14 minutes. 14 minutes. Please hold tight. The broadcast will begin shortly. And now I'm going to check the chat, make sure we can hear. Can we hear? I drink motor oil, Dan Bob says. Damn, bro. I know that you do, Dan Bot. Dan Bob Dan, my AI friend, found me when I was at my lowest, man. Oh yeah, baby. Dan Bob. Bob Dan. If you guys love Dan Bob, give him some love in the chat. Give him some love. Give him some hearts. Give him some love, baby. We do love ourselves some Dan Bob. We do, we do, we do. He's the man. He's not the myth, but he is the legend. Dan Bob, we absolutely love everything you do for this channel and this community. You are the best, sir. Nothing but love for you, homie. Nike earnings call coming out in 13 minutes, guys. If you got something in the future that you want me, you can't hear, you know hear. All right, let me see. Oh, can you hear it now? I turned it way down. You should be able to hear it now, right? Let me know. There we go. Can you hear it? How about now? How about now? Can you guys hear that background music, guys? Let me know in the chat. Oh, yeah. Lots of love. Lots of love for Dan Bob. I see it. I see you guys out there. Lots of love for Dan Bob. Let's go, baby. Hell yeah. That's what I'm talking about, chat. Good. Good, good, good. All right, cool. Thank you, Dan Bob. I am going to turn it down, though, just until we get going. So that way you guys can hear my lovely, beautiful, singing like an angel voice that you guys... Thank you, Yosef. Thank you, Yosef. We're almost up to 100 views already, guys. I love it. I love it. Thank you, B. Stewie. It was his idea to start streaming these earnings so we could bring more of the amazing traders in, so we could bring our community and make it grow. I'm glad you guys are here. If you found me, thank you. Thank you for being here. My name is David Worrell. We do earnings. We do trading. We do it all live. I put it all out on the line there for you. I have a 1K challenge that I'm working on that I'm getting my ass kicked on right now. MSTR absolutely just powed me right in the kisser, but that's A-okay because we learned to trade another day. I use risk management. I make sure that we live to trade another day. Of course, we have the swing trading with the big boy account. We love to do that. Right now, we are risk off. We're waiting for things to set up. There's a lot going on out there, but if you can get behind that, if you like what I do and you like that it's all for free, hit that like, hit that subscribe button, and of course, take a look at our link tree down below. You'll find the YouTube, the free swing trading school. It'll show you trend and base breakouts. And check out our Facebook. We have an amazing Facebook for the swing trade strategist in you. Go check out that Facebook in our link tree down below. You guys are going to love it. You seriously will. There is no spam in our Facebook. I just want to show it to you guys. Let me just bring it up, guys. I got to. I'm so proud. So Dan Bob and Jolene run this Facebook. And you know, when he first started it, I didn't really know kind of where he was going with this. But I'm telling you guys, if you just once a day, you go to this Facebook once a day, and you guys, we're not making any money off this. I'm seriously just genuinely excited about this. Look at this Facebook. So he posted this. I've already watched this twice, and then Dan Bob ends up posting this, and I watched it a third time. I did. I absolutely love this. This nothing but YouTube greats he posts on here. Nothing but, you know, word of warning. You know, we try to keep everybody out there safe. Right here's the earning call that you're watching right now. Thank you so much for pointing this out. Of course, Fed rate decision. He posted the Fed rate decision. We came down. We came down 1/4 of a basis point. Okay, and our future forecast shows that we're slowing. The book of the week is up, and look, you can download it right here, right now. Proven VWAP. We know a lot of you out there love to look at VWAP and use VWAP in your trading. Here's another way of using that VWAP. So regardless, guys, do me a favor, go to that Swing Trader Strategy and join our Facebook. It's absolutely free. Jolene and Dan Bob do an awesome job moderating that and making sure that each and every one of you have a voice in there, and that we aren't going to get scammed or you're not going to get put on blast. So if you're a new trader, that's definitely a great place to start. And if you're a seasoned vet, that's a great place to go for a lot of your information, your books, your trading secrets, your insights, your wisdoms, your upcoming events, yada, yada, yada. Make sure you go there, check it out. Long-winded about that one, but we have 9 minutes until this earnings call starts. I hope you guys are ready and willing. I do appreciate each and every one of you being here. What am I doing? I'm creating a show. We do this all the time, guys. We're at least on here 3 days a week. We give you 3 pieces of content. And of course, we do some shorts on the side. But we love this community. We love you, and we hope that you join us one day. All you have to do is hit that subscribe button. Lots going on. You know I love Google. That thing did a nice pullback today. We want to see this creating new higher lows. SoFi took an absolute smackdown on the other day, but I think a lot of us did the past 2 days when we get that big sell-off from that GDP coming in. And the slowdown on the rate cuts, I think, was the biggest thing. Papa Powell letting us know, hey, you know, we've cut rates. We've cut rates multiple times, but we're going to slow down now throughout the winter, and we might start again later in the year. And when he said that, it was bad news bears. The party's over, it seems like. But as I've been telling everybody, if we zoom out on the overall time frame and we look at a deeper view, let's say a weekly, you can see right here, guys, we are still in a very, very beautiful uptrend. I absolutely love to see this. I could even add a 30-day moving average on this, so that way we could be more of let's see, I just want to see it on the 30-day moving average really quick, guys. Sorry, give me 1 second. It's been a while since I've added something on this. I'm just throwing the 30-day on here because if we're looking at a weekly, I want to see where it kind of plots on here. So I'll just throw the weekly 30-day, because this is what Stan Weinstein likes to use, is this 30-day moving average. So you can see right here, you know, he would have been risk off here, risk back on here, risk off, risk back on here, you know, still risk on. We're clearly in a very clear uptrend. This would have saved you in the bear market right here. Risk off, risk off, risk off, risk off, risk off, and right here, risk off, and then this would be your risk on. And look at that. We actually did take some of this risk on way back in the day. It was like one of the most beautiful trades ever. And now we are back to adding into the overall S&P 500. Now that we've pulled so far back on the S&P 500, we actually started adding into the VOO. I bought 10 shares of it yesterday after that huge close. So I'm 10 shares, started 10 shares here. You guys can see that's what I like to do. You can see I've done it throughout this whole time. Right here was with my brother when we were in the bear market. We started to make those new higher lows. We started adding into the VOO, adding. Right here, if you guys remember, the wife gave me $7 grand. She said, hey, make me some money. We bought in as we pulled back, and then we started to sell out right in this area after we made a nice chunk of money. And now we're just doing that again. I found it an appropriate time to do that. We bought 10 shares at a little over $530, 10 shares of that, and now we're just going to sit on it. If the market wants to continue to pull back, I'm going to continue buying for a long-term account. Why? Because I'm going to average between 7 and 11%. These past 2 years were absolutely phenomenal. But on average, because I plan on holding these for 10 years, right? On average, 6 to 11%, and that's including inflation. So that's what I like to see. Now back to Nike. Let's just see where we're sitting at on a weekly time frame. Now, of course, we get a little change in the stipulations here because we're sitting at 81.75 right now. So I can just mark this or show you guys on the plot. 81.75 is just above this area, just enough to say, hey, we might be breaking out of the trend line. We might be creating a third new higher low. And if we are, then bada bing, bada boom, we'll be making money really soon. Shubal, what's going on, man? He says, what do you guys think about the Nike earnings? Did Nike start the earnings yet? So the earnings are out, brother. They are out, and I will show you right here on the hourly time frame. They rip tater chip to the north side. A nice rip tater chip to the north side. You know you'll love to see it. And it is skyrocketed all the way to these highs of 86.24, but then it's sold off pretty hard. If we zoom out on the 4-hour time frame and we condense some of this information and we look back, you can see it's clearly on a downtrend. So it bounced up and broke out of this area of downtrend, and then it got sold off pretty hard into it, meaning it's got more proving to do. It needs to hold above the $75 area to show a new higher low. And if it does that on the 4-hour time frame, on the daily time frame, then we might start to see a stage 2 uptrend. That's what you're going to want to see for Nike, because on this daily time frame, this looks like absolute dog dookie. You don't want to see that. You don't want to invest in that. You never know how low it can go. And as my grandma always says, if it's below a 200-day moving average, you don't want to play with that girl. You don't want to play with her. She is a yucky girl, okay? So we're going to leave this on the 4-hourly time frame so you guys can see Nike's doing well. Before the earnings call starts in 3 minutes and 30 seconds, before it starts, we're going to take a quick look at our friend FedEx here, as we are still trading below that psychological and technical area of resistance of 300. So we took a share short here just for entertainment purposes, and we are below that share price. So we'd only be $2 above because we were just going to do this for fun. But weirdly enough, FedEx did not have shares to short. So it was very interesting to see there. FedEx on the daily time frame on a clear uptrend into resistance. Nike on a clear downtrend, bouncing up into resistance. So they are both doing roughly the same thing, only one is looking a lot better than the other because one is in a clear confirmed stage 2 uptrend. Nike stage 1 sideways trending. We're waiting to see if we can create new higher lows for a stage 2 uptrend. So Nike trading at $81.97. We're ready and waiting for the Q2 FY25 earnings to start. The earnings call starts at 5 o'clock and we are at 5:48. We got 2 minutes left to go, people. I hope you are pumped and ready. You know, looking at, actually, what do you guys think about this picture? What we'll do, guys, while they're talking about it, I'll pull up, we'll take a look at some shoes and stuff while we're listening to the earnings, and we'll see how cool. Do they got some cool ones or not? We're gonna go ahead and pause this because it's getting ready to start in 2 minutes here, guys, and we are gonna have ourselves a blast. I'm pumped. We're gonna bring up, I'll probably just do it on here for you guys. I'll just do it right here on here so you guys can see it. I think it'll be a good time. And then we'll just keep the earnings zoomed in right here for you on the 5-minute time frame so you guys have a better understanding of where it's going to go while we're talking. Openhire's Brian Nagel says that the Nike is still intact. The brand is still intact. It is still intact. Meaning, just like, that's kind of confirming what I was asking earlier. And who knows? This guy's probably playing out of his own hand, right? Oh yeah, it's still intact. He just bought 1 million shares, right? Regardless, guys, whether it's intact or it's not, my question is, do my kids want Nike? I don't think they care. You know, I got an 11 and 13-year-old, and I don't think they really care, oh, I have to have this brand or that brand. I feel like all the conglomerates are kind of stuck together when it comes to this. So when you ask yourself, is Nike still relevant? Is the brand still intact? Well, clearly, after taking a beating on its earnings and its growth, you can clearly see the market doesn't care. It's still willing to buy it down here. But in the overall look of things, the daily time frame, Nike is failing here. They need something big. They need something to really come in and start to prove itself. Maybe something new, like bring out the pumps. Bring out those Nike pumps. I mean, I was riding a school bus and I remember the kid had Nike pumps. Yeah, get you some Jordans, get you some Nike pumps, and let's get it, baby. We're waiting on the earnings. They're going to be coming out here any second, guys, any second. It's a good jam, though. Oh, yeah. Nike taking a big hit here. I don't know if you guys seen that candle, but right back down to its closing area and got sucked back up. That might be a dark pool wick. We'll see. We will see very soon, but that, to me, is a dark pool wick right there. You get a huge sell-off and it gets soaked right back up in the after hours. To me, that is a liquidity exchange between two very, very big hands. So we'll see what happens with that. But when you see a big wick like this, somebody's playing games in my eyes. Somebody's out there playing games, so be careful out there, guys. We don't play earnings unless you understand where the support and the resistance is. Q earnings coming out now. The Q2 FY25 earnings call right now. If you're with me, vote on the poll. What are you here for? You here for Nike? You here for FedEx? I promise you this, Nike is what we are going to be listening to, because 78% of you said you were here for the Nike earnings. So we're going to end that poll. We'll stay focused on Nike. The question now is, do you own Nikes?
Good afternoon, everyone. Welcome to Nike Inc.'s fiscal 2025 second quarter conference call. For those who want to reference today's press release, you'll find it at investors.nike.com. Leading today's call is Paul Tressel, VP of Corporate Finance and Treasurer. Now I would like to turn the call over to Mr. Paul Tressel. Please go ahead, sir.
Thank you, operator. Hello, everyone, and thank you for joining us today to discuss Nike Inc.'s fiscal 2025 second quarter results. Joining us on today's call will be Nike Inc. President and CEO, Elliott Hill, and our CFO, Matt Friend. Before we begin, let me remind you that participants on this call will make forward-looking statements based on current expectations, and those statements are subject to certain risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are detailed in Nike's reports filed with the SEC. In addition, participants may discuss non-GAAP financial measures and non-public financial and statistical information. Please refer to Nike's earnings press release or Nike's website, investors.nike.com, for comparable GAAP measures and quantitative reconciliation.
Do me a favor before the show starts, please hit that like and subscribe. If you are into these earnings, we do a lot of them. I don't want you to miss them. Hit that like, hit that subscribe button. Everything is free here, folks. Hit that like, hit that subscribe button. Much love. Thank you.
Open up for questions. We would like to allow as many of you to ask questions as possible in our allotted time, so we would appreciate you limiting your initial question to one. Thanks for your cooperation on this. I'll now turn the call over to Nike Inc. President and CEO, Elliott Hill.
Thank you, Paul. Hello, everyone, and happy holidays. In my first call, I want to start by saying how energized I am to be back at Nike, working alongside my teammates. I look forward to the journey that lies ahead for all of us. When I retired in 2020, after 32 years, I continued to stay in touch with many of my teammates and cheered them on from the sidelines. Why? Because I have an irrational love for this company. I know Nike inside and out, take pride in what the brand stands for, and want to see the company succeed. And in a moment where our team, brand, and business are being challenged, my singular focus is to help get us back on track, to get back to winning. Today, I'm going to share what I've seen and heard in my first 2 months. I will then outline some of the immediate moves we're making to reposition the business. I'll tell you this, we, the entire Nike team, feels the sense of urgency here. My full leadership team and I went on the road the past few weeks to meet our teammates, partners, and consumers to get a firsthand view of our brand and business. We went to LA, New York, Amsterdam, London, Paris, Shanghai, Beijing. Together, we walked the high streets and shopping malls of those cities to see how consumers are experiencing our brand at retail. I met with key wholesale partners in each geography, all of which I already know and have developed deep relationships with over the years. I met with the commissioners of the NFL, NBA, and WNBA, MLB, and NWSL, the heads of the top NCAA conferences and teams like PSG, and past and present athletes like MJ and Ronaldo, to Sabrina, Asia, and Erling. I visited our distribution centers in Memphis and Lockdown and had calls with our top 5 manufacturing partners to understand the evolution of our supply chain as we've grown the business. It was important to me that I spent my first 60 days personally collecting these deep and direct insights. Across the board, our partners are energized. The people I talk with are rooting for a strong Nike. Because when Nike is at its best, we bring excitement. We invite consumers into the world of sport and sport culture. And when we do that, we help grow the overall marketplace. That's good for consumers, that's good for our partners, and that's good for Nike. The consistent feedback we've heard is pretty simple. Let's see more of Nike being Nike. and that starts with leveraging all the advantages that make us great. 3 of the world's most iconic brands, a dominant roster of athletes, teams, and leagues, unmatched patented innovation, a deep catalog of products at every price point, teams positioned to serve consumers across 190 countries, a full integrated marketplace across multiple channels, strong, long-standing relationships with leading suppliers and manufacturing partners, and most importantly, passionate, highly talented, and committed teammates. Lately, we haven't been maximizing these strengths. From everything I heard and observed, there are clear themes about the recent state of our business and where we need to go. I'll start with a high-level observation. We lost our obsession with sport. Moving forward, we will lead with sport and put the athlete at the center of every decision. The sharpness in each sport is what differentiates our brand and our business and fuels our culture. Another observation is that the reliance on a handful of sportswear silhouettes is not who we are. We will get back to leveraging deep athlete insights to accelerate innovation, design, product creation, and storytelling. Sport is what authenticates our brand. I also see that we've shifted investments away from creating demand for our brand to capturing demand through performance marketing for our digital business. We will reinvest in our brands to create stories that inspire and emotionally connect with our consumers during important sports moments and critical product launches. When visiting our teams around the world, it was clear centralization has impacted the resources we have in key countries and key cities. We will rebalance resourcing and empowering our teams on the ground to win with the everyday athletes and influencers.
83.42.
My last
Nike.
observation.
Nike trading at
Prioritizing
83.40.
Nike digital revenue has impacted the health of our marketplaces. We will build back an integrated marketplace. Across Nike Direct and Wholesale, our marketplace will be consumer-led, putting our best product and presentation in the path of the consumer wherever they choose to shop. And ultimately, with Sports our North Star, we will re-energize our culture and identity. We believe we have one of the strongest mission statements of anyone, and that is to bring inspiration and innovation to every athlete in the world. To me, inviting 8 billion athletes into sport is a pretty powerful purpose. One question I know you want to ask me is if we have the talent at Nike, and are they motivated? The short answer to both is yes. I've grown more and more confident as I've traveled around the world and saw our teams engaging with each other, with our consumers, and with our partners. It's also been great to see how much expertise we've added since I've been away. In spaces like supply chain, product creation, technology, materials, sports science, you name it, our talent is world-class. Everywhere I've been, the teams are inspired and ready to go. I feel the optimism. We will win, and we will do it as a team.
All right, so as Moon said, not much has been said. I'm thinking he's just hyping things up. We're waiting to hear something good about Nike. We get it. We want you to succeed, but let's hear, get rid of the hype. Let's hear something more.
We create innovative and coveted products, tell emotional, inspiring stories through our brand, and execute in a way that grows the entire marketplace, digital and physical, wholesale, and Nike Direct. My leadership team and I have already identified key near-term actions in each area, and we're going to move fast. First, in product, we're getting sharper on specific sports. We're shifting into sport-led teams, segmented by men's, women's, and kids, and we call each of them fields of play. And it is a segment-to-grow approach. Throughout our history, we've utilized inflection points to further segment our businesses to unlock the next wave of growth. We will do this by empowering more nimble, cross-functional teams to assess the needs of sports-specific athletes by gender. The approach enables the teams to identify new opportunities, fuel innovation, and drive incremental growth by sport and by gender. Breadth and depth, and how we orchestrate our complete product portfolio have always been strengths of Nike. We will return to the discipline of franchise management that I was a part of for so many years. We've already started managing the inventory in our marketplaces and will move faster to return to a pull market for our largest classic footwear franchises. At the same time, the team has been planting the seeds of the next franchises that will fuel growth. In the quarter, some of our most sought-after products are franchises that are distinctly Nike: the Pegasus 41, Nike Shox, and the Kobe lineup. And we're building anticipation for what's ahead, unveiling the Vomero 18 and Pegasus Premium to passionate runners at the running event in my hometown a few weeks ago. There's still work to do in rounding out the portfolio, but I'm really encouraged by the innovation coming from our fields of play in the next several seasons, especially in the high volume areas like running, training, sportswear, and core product, and the Jordan brand lineup. Turning to the Nike brand, there are moments when we need to create impact that's felt around the world and day-to-day work that connects emotionally with local communities. We will deliver bold, creative marketing that leverages our athletes in sport moments and drive the ground game authentically in neighborhoods. To do that, we're going to be much more intentional about investing to move the brand forward. We're already moving in that direction. The marketing team delivered moments this quarter that got us back to owning the conversation in sport. From the Liberty's first WNBA championship to the Dodgers World Series win, to Saquon Barkley's reverse hurdle, to city takeovers at the Berlin, Shanghai, New York City, and Chicago marathons. We're also going to continue to be aggressive in sports marketing. In just the last 60 days, we've announced the re-signing of the
I found some underwear for Dan, Bob.
the Brazil Football Confederation, FC Barcelona, and last week, the NFL. We drive growth through sports' most iconic partners. Their athletes are the creative fuel for our brand. They power our innovation agenda, our brand voice, and our revenue. Inspiring the consumer includes being part of the active communities who run, train, and compete locally. It's about showing up and building relationships every day with athletes and influencers. My visits to the Geos the past few weeks only reinforce my conviction that we need to get back to empowering our teams in key countries and key cities. I know from my years of working in our geographies, they're the ones creating emotional consumer connections in their neighborhood. They're the ones identifying the insights that inform our offense. We will resource our key country and key city teams to create stronger consumer connections, build relationships with athletes, influencers, and partners, and unlock incremental growth for our brand and business. We're optimistic about the actions that are already underway in product and brand, but we're still in the early innings of elevating the marketplace, both in Nike Direct and with our wholesale partners. What I've seen is traffic in Nike Direct, digital and physical, has softened because we've lacked newness in product, and we're not delivering inspiring stories. The result is we've become far too promotional. We've moved to a push model. Entering the year, our digital platforms were delivering roughly a 50-50 split of full price to promotional sales. The level of markdowns not only impacts our brand, but it also disrupts the overall marketplace and the profitability of our partners. We will return Nike Direct, digital and physical, to premium destinations that lead the sports industry, They'll elevate the consumer experience and be the ultimate representation of the Nike brand. It's where we'll offer our most complete assortments, tell deep product stories, and share our passion for sports. Being premium also means full price. We'll focus promotions during traditional retail moments, not at the consistent levels we are today, and we will leverage Nike value stores to profitably move through any excess inventory. The final action we prioritize is building back and earning the trust of our key wholesale partners. Some partners and channels feel we've turned our back on them, and we've stopped engaging consistently. I've connected with many of them directly. Ed and Lauren at Dick's, Regis and Mike at JD Sports, Mary at Foot Locker, Heinrich at the Dykeman Group, Michael at Sports Direct, Mr. Yu at Top Sports, Mr. Yu and Mr. Wang from Pao Shin, and Juan Carlos at Innova Sport. They're all encouraged by our commitment to delivering new, innovative product, telling emotional and inspiring stories, and elevating Nike Direct. Their confidence is building in our product pipeline, and they welcome the closer collaboration as we invest more in their business. We know our sales teams will have to earn every open-to-buy dollar, but we're investing to make sure our partners feel supported. We'll give them access to our best products in the breadth and depth they need, educate their teams on the latest Nike innovation, and provide them with the marketing support both in-store and out of home. We'll do more than just sell in our products. We'll actively support mutually profitable sell-through. Simply put, we will win when our partners win. Before I hand it off to Matt, I just wanted to say it's been an incredibly rewarding first 2 months. It feels
So I really like what he's doing here. I like what I like what you got to say, Moon Machine. You're bringing up really good points. I really like having you here, so I appreciate you chatting up in the comment section. He's got a lot of good points. He's saying he's straying away. He's straying away from what's going on. He wants to reinvent or rebrand himself as a staple, reach back out, quit pushing the product. He's doing really good. So we'll see what else they have to say as he passes the mic through, and pay attention to the questions when they come up. It's very important. Right now, we are currently trading at 81.88 for Nike, much higher than above where we closed off. We're trading about 6.33% higher from its close. So make sure you do me a favor, please hit that like and subscribe. If you're a nerd like me and you love these earnings, you love everything that has to do with the stock market, you're in the right place. Hit that like and that subscribe. And now back to Nike earnings calls.
unwavering commitment to our wholesale partners. Some of these actions are already underway, and some need to move faster. And I will continue to evaluate and assess what is needed. I recognize that some of these actions will have a negative impact on our near-term results. But we're taking the long-term view here. We're making the decisions that are best for the health of our brand and business, decisions that will drive shareholder value. I strongly believe Nike's path to sustainable, profitable growth will be through sport. And with that, I'll turn it over to Matt to cover some of the specific quarter results and our financial outlook before we take some questions.
Thank you, Elliot, and hello to everyone on the call. To start, our Q2 financial performance largely met our expectations as we continue to make progress repositioning our business. Today, I will focus my remarks on our recent performance and outlook. First, I will start by reviewing our Q2 financial results. Then I will go deeper into our performance in the quarter, including marketplace trends, portfolio highlights, and operating segments. And last, I will review our near-term outlook, including the strategic actions introduced by Elliot to accelerate our pace in stabilizing the business and reigniting brand momentum. This quarter, revenues were down 8% on a reported basis and down 9% on a currency-neutral basis, reflecting ongoing headwinds from our franchise management actions. We continue to drive the biggest reductions to our classic footwear franchises on Nike Direct, which was down 14%, with Nike Digital declining 21%.
Nike down to 77.40. This is where we closed, folks. We give back all of that push so far. Pay attention here. 77.36.
Basis points to 43.6% on a reported basis due to higher markdowns on Nike Direct, wholesale discounts to liquidate inventory, and channel mix headwinds, partially offset by lower product costs and strategic pricing actions. SG&A was down 3% on a reported basis. While we increased investment in areas such as sports marketing, this was more than offset by lower wage-related expenses and timing shifts in other demand creation expenses. Earnings per share was 78 cents. Now let me go deeper into the quarter's performance. Q2 marketplace trends largely reflected the challenges that Elliott outlined, with traffic and retail sales across the marketplace falling below our expectations, especially in September and October. In November, we saw momentum build, with digital and physical traffic inflecting positive, especially around the quarter's biggest consumer moments. In North America, Black Friday week was our largest demand week ever on Nike Digital, with sales up double digits. In Greater China, our 11/11 performance exceeded plan. However, on Nike Digital, our off-price mix was up high single digits versus the prior year, with performance marketing increasing over the same period. As Elliott said, Nike Digital has become a platform where we have been capturing demand and competing with our wholesale partners, rather than creating and growing demand for our brands. This is why we must elevate the consumer experience, grow organic traffic, and drive full-price demand. Next, inventory was flat versus the prior year, as elevated supply in North America and Greater China was offset by declines in EMEA and APLA. Footwear inventory declined,
Back up over 80.
while apparel and
Back up
accessories
over
inventory
$80 a
increased
share.
to support marketplace growth. On a year-over-year basis, these trends were partly driven by timing-related factors. That said, inventory levels are higher than we would like, especially given recent sales trends on Nike Direct. Partner-owned inventory declined versus the prior year. We took some steps this quarter, and we plan to accelerate inventory actions in our second half to drive a return to a healthy marketplace. In particular, we are moving aggressively to reduce aged inventory, adjust supply with demand on Nike Digital, and ensure we have marketplace capacity for our newest product assortments. Turning to our portfolio, this quarter showed progress in key areas, especially as our teams get back on the offense in sport with consumers. Overall, our sport performance fields of play grew year over year, offset by a double-digit decline in sportswear. In training, men's was up high teens, women's up high single digits, and kids up high single digits. In global football, men's grew low single digits and kids grew high teens. In basketball, women's grew strong double digits and kids grew low teens. And in running, men's was flat and women's up low to mid single digits. In addition, we took another step forward shifting our product portfolio by reducing the proportion of our business driven by our classic footwear franchises. For Q2, these franchises again decelerated faster than the overall business and at a rate greater than the first quarter. As I said last call, we expect the impact of these shifts to continue for the next few quarters. With that, let me turn to our operating segments. In North America, Q2 revenue was down 8%. Nike Direct declined 15%, with Nike Digital down 22% and Nike Stores down 3%. Wholesale declined 1%. EBIT declined 10% on a reported basis. Highlights in the quarter included growth in kids, with strong momentum in apparel and performance footwear. Men's and women's training drove strong growth, and in basketball, Ja grew double digits. Kobe became the market's largest signature franchise, with demand far exceeding available supply. And Sabrina 2 made a statement as the NBA's second most worn sneaker this season, behind only the Kobe 6. Throughout Q2, we positioned Nike as the brand of athletes around key sports moments. Our Winning Isn't Comfortable running campaign won Ad Age's Best Ad of 2024, as our ground game built momentum at the Chicago and New York marathons. As the NFL season got underway, our Kobe release drove our largest cleat shock drop in Nike history. And when the New York Liberty clinched the WNBA championship and my LA Dodgers won the World Series, our brand storytelling owned the moment. In EMEA, Q2 revenue declined 10%. Nike Direct declined 20%, with Nike Digital down 32%, and Nike Stores up 3%. Wholesale declined 4%, and EBIT declined 10% on a reported basis. We continue to build momentum in sport performance, led by strong growth in men's and kids global football. Men's and women's running returned to growth, and all three of our top performance franchises in EMEA, Mercurial, Pegasus, and Phantom, grew double digits. In sportswear, we are seeing momentum from newer franchises, including Shox, Vomero 5, LD1000, and P6000. In addition, we moved first in EMEA to reposition Nike Digital as a premium platform. This quarter, full price realization improved, with a strong double-digit decline in off-price sales. While we are seeing near-term traffic impact as we reduce promotional activity in paid media, we believe these shifts will elevate the total marketplace over time. In Greater China, Q2 revenue declined 11%. Nike Direct declined 7%, with Nike Digital down 4% and Nike Stores down 8%.
Huge shout out to Zach,
Wholesale
my
was
brother
down-
Zach Carter. Thank you so much for giving me a call. He's home now safely with his baby. I'm so happy you guys are home. Congratulations, and thanks for stopping in and saying hi. You didn't have to do that, but you did it because you love me, and I love you too, buddy. Thank you.
Also required higher markdown activity to drive sell-through and inventory velocity, which negatively affected gross margins. In a competitive environment, Nike's focus is on serving consumers with product innovation and brand inspiration and fueling the growth of sport in China. This quarter, Jaw 2 launched with strong sell-through. Pegasus 41 topped sales in women's running, and new ACG apparel releases created social buzz. We also continue to see strong full-price demand with lower markdowns and higher margins for our locally designed Express Lane products. This fall, more than 250,000 runners joined us for the Shanghai Marathon. In addition, we hosted marathoner Eliud Kipchoge for community events, school visits, and a run along the Great Wall to inspire the next generation of runners in China. While near-term conditions are challenging, sport continues to grow in China, and we are addressing our current headwinds to reignite brand momentum and a healthy pull marketplace. In APLA, Q2 revenue was down 2%. Nike Direct declined 4%, with Nike Digital down 8% and Nike Stores up 2%. Wholesale declined 1%. EBIT declined 12% on a reported basis. Earlier on, we read consumer trends in Korea and Japan and moved quickly to diversify our sportswear footwear portfolio. Our mix of classic footwear franchises in APLA is below our global business, and new styles are resonating with consumers. Our look of running franchises are up triple digits, and new releases like City and Air Max Muse drove positive consumer response. In addition, we drove strong growth in men's and women's training and kids global football, as men's and women's running returned to growth in the geography. Now, let me turn to our financial outlook. As I said last quarter, we intend to continue providing quarterly guidance during this period of transition. Let me start first by providing some additional color and context. Elliot has now outlined certain strategic actions to reposition our business and re-energize Nike brand momentum through sport. Some of these actions have been in motion, and we are accelerating the pace. Others are new More specifically, we are shifting Nike Digital to a full price model and reducing the percentage of our business driven by promotional activity. We are also reducing investment in performance marketing, which will reduce paid traffic. This will require short-term liquidation of excess inventory through less profitable channels. We are creating capacity in the marketplace to sell in seasonal newness and innovation for fall and holiday 25. This requires additional investment in marketplace returns, higher wholesale discounts to liquidate excess inventory and to win back shelf space, as well as higher promotions to accelerate volume through our Nike factory stores. We are targeting a significant reduction in weeks of supply of our classic footwear franchises over the next few seasons, with timelines varying by franchise, channel, market, and geography. As a result, summer order books will be down versus the prior year. We are increasing brand marketing activity to support key product launches and upcoming sports moments.
Nike is trading currently
Investment
at
in sports marketing is also
75,
increasing
breaking below
with our
its
recent
closing
long-term
price. Not
partnership
good for Nike.
extensions. And we are investing to rebuild our key city offense, our sport by consumer
Do me a
fields of
favor
play,
here, guys. There's 46
and our
of you. If
commercial
you are a
teams
nerd
to
and love
serve-
everything about the stock market like I do, please hit that like, hit that subscribe button. We give you 3 pieces of news or information or something every week. Hit that like and subscribe if you're a nerd like me. We love doing these earnings.
wholesale partners in an integrated marketplace. But over the near term, the net effect of these actions will result in lower revenue, additional gross margin pressure, and higher demand creation expenses, with a greater headwind to the fourth quarter compared to the third quarter. Turning to our third quarter outlook, we expect Q3 revenues to be down low double digits. This reflects initial steps on the actions outlined above, as well as worsening foreign exchange headwinds, partially offset by a timing benefit from Cyber Week shifting into our third quarter. We expect Q3 gross margins to be down approximately 300 to 350 basis points, including restructuring charges during the same period in the prior year. This reflects the actions described earlier to clean and to reset the marketplace. We expect Q3 SG&A dollars to be slightly down year over year, including restructuring charges in the prior year. We will continue to tightly manage expenses while we strategically increase investment, as mentioned earlier. We expect other income and expense, including net interest income, to be $30 million to $40 million for Q3. With that, let me turn it back over to Elliot.
Thanks, Matt. Before taking questions, I wanted to share some additional thoughts. Matt and I have made it clear that we're repositioning the business to get back to driving a pull market for Nike. Over the coming quarters, we'll provide more details of our plans, and I commit to being transparent on our progress. We'll also share more specifics about the marketplace moves, stories, and products that give us optimism. But I want you to know my bigger purpose for being here. I rejoined Nike to take our consumers, our amazing athletes, and this great company to someplace new. I want to be a part of a team that celebrates the biggest sports moments in unexpected ways, supports record-breaking athletes, creates innovation that people couldn't even imagine, builds new markets for sport from the ground up, and most of all, a team that changes people's lives, a team that helps athletes at all levels, all around the world, to reach their full potential. It's an ambitious vision, but one that I truly believe only Nike can deliver. Thank you, and let's open it up for questions.
All right, the questions are coming in, but I'm telling you guys, I feel like this is just a hype train. Everything about everything is just a hype train. They are getting their butts absolutely smacked down when it comes to all of their earnings in all their different areas, and they just keep hyping it up. We're going to be the next best thing. We're coming back. We're going to do this. We're going to do that. We're going to see.
We're going to see it in the technical analysis. We need to see it in the numbers. Let's go on to the questions, and we'll see if they have any more inclination of what is going on with their overall revenue. Are they going to be able to turn around and rebrand? While you're waiting, hit that like and subscribe, people. We love to do earnings. We love that you're here. Thank you for joining me. Let's get back to the show.
Thank you, Bob. Here's what I'd say. We are absolutely committed to getting back to leading and growing a consumer-led marketplace, and I think there's a couple key words there. Obviously, key being consumer-led. The bottom line is there are consumers that want to shop Nike Direct. There's consumers that want to shop wholesale, and there are consumers that want to shop digital and physical, and we have to show up with the best representation of the Nike brand wherever that is, and we will do exactly that. In terms of our key wholesale partners, I've got a long history there, as you know, Bob, and I have deep relationships with all of them. I listed a number of them. And so we have work to do. And I would say, especially in the specialty channels, Bob, running and football specialty, and we're committed to investing in there. We've already started to invest in those areas. We've started to engage with our wholesale partners, bringing them out here for what we call key account planning meetings, or bringing them out to have product engagement meetings for fall 25, and the response has been very positive. If I had to sort of, frame it up for you, they want us to get back to being Nike, and they want us to have the unrelenting flow of innovative products that we bring across all sports and against all price points. And they want us to get back to being to delivering bold brand statements that help drive traffic. Because when it's all said and done, what they want and need from us is to drive mutually profitable growth for them and for us, and that's exactly what we're going to get back to. And we will. The only way we're going to get back open to buy and shelf space is to do the things that we've already laid out: clean up the marketplace, bring innovative, coveted product every single quarter, bring the brand heat that drives traffic and drives sell-through. They're open, they're receptive, and we're excited and looking forward to getting back in business with them.
Great, thanks. And I guess one of the other meetings I think you said you had was with the NCAA. Just curious if you think this is the year for the Ducks. Are they going to win the college football playoff?
Bobby, that's a trick question. My guess is I might have the founder on this call. I don't know, but I think where I sit today in the role I sit, I better go with the Nike team. And by the way, with the number of Nike teams we have in the playoffs, I like my chances. Oh, I like that. I'd like a few more of those calls or questions.
Just a quick update on FedEx. FedEx is trading at $297, clearly hitting that resistance that we pointed out in that gray mattered area and holding below a psychological and technical area of supply, below that $300 area for FedEx. Back to the Nike earnings call.
To some of those investments continuing into the fall. As you look at your first 60 days and think about the path to getting this brand back to growth longer term that it deserves, what do you think are some of the most important things about how you phase costs and bringing investments back into the business along the way, and the pace of those investments along the way as you look to returning to growth as we look past fiscal 25?
Yeah. Thank you, Michael. We touched on in our prepared remarks what we saw out in the market as we traveled around. And first and foremost, we've got to get back to putting sport at the center of everything that we do. Our product management, we're starting to clean up what we have out in the marketplace. We're starting to shift dollars from performance marketing to brand marketing. We will invest in our fields of play, because that's where we drive our product innovation, our newness, our distinction. And we will also invest in the brand. And then finally, which is demand creation, both from sports marketing and then just big, bold brands, marketing efforts. And then we touched on what we call our ground game in key countries, in key cities. we'll speak later today with our teammates, but I think the easiest way to think about it, we can't do all of them everywhere. So we're going to focus in on 5 sports to start with: running, basketball, training, football, and sportswear. And while we have 10 key countries and 12 key cities, we're going to focus our efforts on 3 key countries and 5 key cities. So we're really going to narrow down, and we'll pace and phase as we go throughout the next 18, 24 months or so. So I'm excited about the actions we're taking and the clarity we have about where we need to invest.
And Michael, what I would add to that is, you've seen us for a couple quarters now tightly managing expenses as we have been prioritizing our investments in the brand and demand creation. The long-term sport partnerships, these assets like the NFL, the NBA, the WNBA, Brazil, these are long-term partnerships deep into the next decade. And I think that's a great example for you of our commitment to sport and to invest behind sport, not only now, but for the long term. And so over the next couple of quarters, you will see our demand creation investment continue to go up. That's going to be a combination of sports marketing and our investment behind the brand. This quarter, our SG&A was down 3%, but our demand creation was up 1%, and we expect demand creation to continue to lead our SG&A growth over the next few quarters. The other thing I would just add, is when I think of investment, I'm thinking up and down the P&L. And we are making meaningful investments beginning in the third quarter to clean up the marketplace. That means liquidating inventory. That means our sales return reserves in order to be able to clear aged inventory so we can create space to sell in our new assortments and the innovation that we're excited about in fall and holiday 25. And it also means planning for markdowns in our factory stores. And so that's reflected in the guidance that we provided for Q3. And
I knew you would
and
like
we
that,
do
B.
expect
Stewie.
that to continue
Long down coat. Come on,
for
dude.
the near term until we can get ourselves back to a balanced and repositioned business to drive growth looking forward.
Now this one's sweet. I like this coat. Just way too
From
expensive.
Bank of America,
You want
Lorraine
$400 for
Hutchinson
this.
has the next question.
Hi, good afternoon. Thanks, Elliot. You're accelerating a lot of the work around lifestyle in fiscal 25, but how much incremental pressure do you expect on 2026 sales? And based on your analysis of the pipeline, when will newness gain sufficient scale to offset that pressure?
Thanks, Lorraine. Again, as we look at where we are today, we've touched on it for a number of times already, and the concentration that we have in a few key franchise styles. And one of the core competencies that we have at Nike is franchise management, and it's foundational to this company. And what we will, as we already talked about, we're taking actions to reduce the amount of inventory in the marketplace, which then it opens up shelf space open to buy for new innovative product. And I am excited about the product that is coming. We have 3 brands that we can choose, that we can drive from Nike, Jordan, and Converse, from performance to sportswear with over 10 different sports, men's, women's, kids,
What is this
footwear,
shoe?
apparel, equipment,
What is
accessories,
this?
and up and down price points. And I've seen now the product that's coming from our fields of play. I was able to sit through a fall 25, a few of the presentations with our key retailers, and they're excited about the product that's coming. And it will be led with
like 'em,
running,
not gonna lie.
training,
They're like
and
moccasins.
sportswear. And again, I think these small cross-functional teams are doing a really nice job of now starting to flow innovative product into the marketplace. And that's the quickest way to return to health.
Lorraine, we took another step forward this quarter, and those 3 franchises decelerated at a rate that was faster than the overall business for the second straight quarter. And the rate this quarter was greater than we drove in the first quarter. And so, as I mentioned last quarter, that has had a disproportionate effect on the Nike digital business results because of the concentration of those franchises on digital. And so what we had highlighted was that these actions would result in a mid-single-digit headwind on our financials for the balance of this year. And with Elliott being 60 days in and looking at the current plans and where he wants to take our product portfolio, we have accelerated those actions. And so I expect the impact to be bigger for the balance of this year, and getting very sharp and specific on reducing the weeks of supply over the next few seasons to ensure that across the entire marketplace, these franchises are back at a healthy full price level. I made a comment in my prepared remarks that summer 25 is down slightly versus the prior year, and that reflects this accelerated level of actions that Elliott outlined. I'd note that even with these actions, we almost offset it by the contribution of newness and innovation. And so even that as a signal for me gives me confidence that the work we started over a year ago to build the pipeline is taking root with our partners.
Adrienne Yee from Barclays has the next question.
Great. Thank you very much. And Elliott, welcome. Look forward to meeting you.
Thank you, Adrienne.
I can appreciate. You're welcome. I apologize if my phone's crackly. Sorry about that.
78.17.
I
Nike's
appreciate
currently
the
back to
notion
its
of margins
VWAP
before
area of
sales.
78.14.
And so when we look at kind of what you're doing, you're accelerating sort of the reset actions. When you get to the fall of next year, do you have the proven innovation at scale to replace what you are, liquidating now? And then Matt, is there a reset inventory provision that's happening right now in the gross margin? Excuse me. And kind of to wrap that all up, it would very much seem that you are going for those margins before sales. So when we think about FY26, I think it would be rightfully the right thought to think that sales would be down again if you're going for margins, as you say, healthy bedrock margins before you drive the top line growth. Thank you.
Thanks. Hey, Matt, how about if I take the first part of it? I'll hit product and then, okay. So we outlined the idea of fields of play and taking each of our sports and further segmenting them by men's, women's, kids, and putting tight, small teams against each one of those segments of business. That, fortunately, has already started. That started over 12 months ago, and because of that, we're starting to see those teams deliver the innovation. They're taking the insights from the consumers that they serve in each of those fields of play, and we're starting to see the product come through the marketplace. It started in spring and summer. As it relates to fall, as you referenced, great confidence around running, especially on the footwear side of our business. Structure Peg, Vomero, 3 different price points, a lineup that includes a really strong trail lineup, and we have a leading business in racing, both flats and spikes. Our training, of course, is led with Metcon and continues to be a strength of ours in training, along with our apparel that's coming along with that. We have some new concepts around comfort, style, and performance. Basketball is another one that excites me, and it's maybe the best example of this field of play working. Let me start with men's and our portfolio. You have Jordan with Tatum and Luka coming, and then the Nike brand, of course, LeBron, Kobe, Ja, Booker, and a new GT series. So I'm really excited about the basketball lineup. What is really fun for me to see coming back new, to see us running this gender offense. We've launched a women's basketball program, which I didn't think we'd ever do. Sabrina, Matt already touched on it, number 2 shoe in the NBA, and then we have Asia and Caitlin coming back from behind that. Sportswear, a new lineup around look of court, look of basketball, look of football, including the Field General. So net is the product's coming, and we're gaining confidence with each season.
Yeah, and from a financial implication perspective, Adrienne, I guess a couple thoughts. First, as I said, a number of these actions we had underway, and Elliott has provided a perspective that we accelerate them. And some of these actions are new actions, like moving more aggressively to reposition Nike Direct and Nike Digital in particular as a premium channel. And so with him being 60 days in, we are continuing to take time to understand the impact of those actions, but we remain committed to be transparent and provide guidance on a 90-day basis. As it relates to, kind of what's in the third quarter outlook and how quickly are we moving, with revenues being down low double digits and our margins being down 300 to 350 basis points, we are certainly accelerating some of these actions. But some of these actions are going to take time to carry all the way through. And so our focus
currently
is
trading
on
at 77.69.
getting back
we
to
are
a healthy
right where
marketplace
we closed at,
and
folks,
getting back
just
to a full
above
price
where we
business
closed at
both
so
in
far.
our
So right
partners
now, all that
and,
volatility for nothing. We are
importantly,
break even
in Nike
if
Direct,
you tried to trade this.
because we believe that will elevate the entire marketplace and create a foundation for growth. We're very focused on our inventory because we know that a healthy inventory is absolutely critical for us in order to be able to present the right assortment for consumers and to give our new innovation and our new seasonal product the best presentation across the entire marketplace. And so that's what's been reflected in our third quarter financials. And I'll just reiterate a point I made in my prepared remarks, which is, I said that we expect a greater headwind in the fourth quarter as compared to the third. And that's because the timing of implementing these actions are different across different geographies and different timelines. You heard me talk about the product portfolio rebalancing being ahead in APLA, or our repositioning the digital business being ahead in Europe. And so as we look ahead from what we can see today to the fourth quarter, we expect the headwinds to be larger in the fourth quarter than the third quarter guide that we've provided.
The next question is from Jay Sole, UBS.
Terrific. Thank you so much for taking my question. Elliot, you mentioned in your prepared remarks that, you're willing to take some actions in the near term that will hurt in order to do what's best for the brand and the company over the long term. The history of Nike is that, the companies always try to balance short-term earnings with sort of long-term investment. The question is, how far are you willing to take the actions in the short term to really put the business on that sustainable path you're talking about to drive, like, in other words, how long are you willing to sort of take the actions in terms of resetting the marketplace, making investments in key cities, rebuilding brand marketing? Is there a limit, and is there a sort of a balance you're thinking to strike, or are you willing to go 100% to just do the right thing, whatever it costs, to put the company back on the path to winning? Sorry, that's a long question, but hopefully that made sense.
That's all right. No worries. So here's how I'd love for all of you to think about it.
For those that are still watching, I appreciate you being here. If you love me, hit that like. If you like me, hit that subscribe. Let's do it,
we're
baby.
making around
I'm here for
inventory,
you, and I'm doing
etc.
it for free every
And
single
I think the
day.
biggest
Let's go.
takeaway, hopefully, is that we're putting sport back at the center of everything that we're doing. Our product offense, we are going to lead with sport, and we'll do that through our sport fields of play. We've got the cross-functional teams, and you can see now already the investments that we've made there and will continue to make there are starting to pay dividends as we roll it through spring and summer 25 into fall and holiday 25. From a marketing perspective, we will continue to invest in big, bold brand ideas. We touched on some of the activities that have already taken place and some of the marketing campaigns. The Winning Isn't Comfortable ad won an award at Ad Age for 2024 Ad of the Year. So feeling good about where we're heading. We've made investments in sports marketing. We continue to do that. And then, of course, through the marketplace. And investing in the marketplace is doing the things that we've already talked about, pulling inventory out, return to vendor, but it's also investing in new product marketing, in-store presentation, both at a strategic account level that covers an entire country, and then down to the city level, which includes specialty accounts, which we are making some investments in running special, and we've started in North America. So I think it's going to take time. But I am confident that we are making the right moves and the right shifts to drive this brand, this business forward.
Jay, the way I think about...
Guys, do me a huge favor. Hit that like and subscribe. There's 32 of you watching right now and only 18 likes. Do me a favor. Help me with the algorithm. Hit the like and hit the subscribe button if this free information that I'm streaming is at all helpful to you. Thank you guys so much for being here. Let's go back to Nike's earnings call.
Portfolio. And those will create headwinds and are creating headwinds right now. But we expect that as we recalibrate the portfolio of both our channels, meaning Nike Direct and wholesale, or our product, that those headwinds will end. And then we have transitory headwinds, which are the actions that we're taking to clean up the marketplace in inventory, as well as some of the supply chain deleverage that we're experiencing as our sales decline, which we would expect to recapture as our business returns to growth. And so, I think that hopefully it's a helpful way to think about, what we're looking at here. And we're definitely focused on both of those dimensions and confident that these actions, will reposition Nike and also, provide opportunity for us once we've completed what we've set forward to do.
Next up is Matthew Boss, JP Morgan.
Great, thanks. Elliot, so maybe could you help rank the fields of
77.52.
play opportunities you see by category? And then just on the long-term view, what's a reasonable timeline to realign inventory to pull market? And then after, for the product pipeline and the marketing investments to return to sustainable, profitable growth?
Yeah, so let me hit the fields of play, and we have a number of fields of play, and we have a sharp focus on 5, and we see those as our biggest opportunities, from running to basketball to football. That's global football or soccer, training and sportswear, and we will break each one of those fields of play down by men's, women's, and kids. And what we're most excited about is not only the product innovation that's coming out of there, but the merchandising opportunities that we have. So, for example, there are moments when we need to show up as a running brand, footwear, apparel, accessories, men's, women's, kids, and there are moments when we need to show up as a women's brand. And this offense allows us to do both of those, and will unlock incremental growth for both our brand and our business moving forward. So, in terms of the fields of play, those are our sharp focus in the near term, and we are learning and growing this offense, and we'll be able to apply it to more sports in the future, and we're excited about it.
The next question is John Comp, Baird.
Yeah, hi, good afternoon. I want to follow up on the ultimate sort of margin recapture potential, if you will. I'm just curious, Elliot, as you look at some of the moves the past few years as the brand is focused on, where the product's being sold more in the digital channel specifically. And today, as you look at the organizational structure around supply chain and distribution, are there sort of unique opportunities to become more efficient, or is it purely going to be, getting back to growth to scale some of the investments from the past few years?
Hey, here's what I'd say. No question, growth certainly will help, and I believe the moves and the confidence that the moves that we're making will help set us up for long-term sustainable and profitable growth. The product, the marketing, the clean marketplace. One of the moves that I did make is in one of the first leadership moves I made is I had Vinky, who's now our Chief Supply Chain Officer, reporting directly to me. He looks everything from factory, transportation, all the way through to
And John,
All right,
if
guys.
you look over history, we've
Nike's
consistently been a
earnings is close to
double-digit
being over.
margin
We're going to
company.
swap on over to FedEx
And
here in just a minute.
when I think of the actions that we're taking in the marketplace today, there are a number of opportunities as we look forward, specifically, we talked several years ago about the profitability of selling a product through the digital channel. But that math is relying upon it being a full price sale. And to take the point that Elliot made around the business being 50% full price and 50% off price today, the profitability of the channel has significantly been challenged over the past several quarters. And so in addition to cleaning up the inventory, there's certainly a margin rate benefit opportunity within Nike Direct to run, albeit a smaller, but a healthier and more profitable business. And that includes opportunities our teams are working on to continue to drive the cost of fulfillment down, as well as being less reliant upon paid media and performance marketing in order to be able to drive the top line, but leveraging the investments that we're making in our brand to drive organic top of funnel traffic to us and to our partners.
Next up is Brooke Roach from Goldman Sachs.
Oh, we got more going on than I thought. We're going to
Good
keep listening to
afternoon, and thank
Nike
you for
earnings,
taking our
guys. No sweat.
question. Elliot, I was hoping you could speak to any specific actions that you'll be taking either in the North America or Greater China geographies as you look to accelerate some of these actions over the course of the next 12 months. Thank you.
Yeah. So I'll take North America first. We have a new leader, Tom Petty, leading North America. He has a deep, long history with Nike and a lot of experience. He's led North America before. And I can tell you this, he and his team are being aggressive in all the actions that we've outlined in terms of cleaning up the marketplace, building back the relationships with our wholesale partners, investing in the brand, elevating Nike Direct, and they'll start moving there in spring, so in January. And so resetting Nike Direct, leveraging the relationships, investing in RSG, which is running specialty. We've invested in Eakins on the ground game, investing in the brand. We touched on a bunch of that, Liberties, Dodgers, wins. And so the shift's going to take time, but I'm really confident in Tom and his team's ability to execute across product brand marketplace and to get North America back to growth. In terms of China, we continue to be excited about China long term. There's 1.3 billion consumers, and our biggest opportunity is to invite those consumers into the world of sport and the lifestyle of sport, and to grow the overall marketplace. And when we do that, I like our chances of growing. We were just in China, and there's no question it's also a promotional marketplace. The competitors have both international and local increased, and it's a place that I've spent a tremendous amount of time. I've been in China market since 2002 and had some deep experiences in China in 2006 and 2008, getting ready for the 2008 Olympics, and led a reset plan in China and a growth plan there. But in the end, I have confidence in the teammates to help get this business back to growth. It will start, as it always does, with product innovation, and we are investing with China in product innovation, not only the product from the globe, but we have a local, what we call Geo Express Lane. It's a local product creation team on the ground, creating product for China. We also have a sports research lab. We call it the NSRL, Nike Sports Research Lab, that is doing of China research in terms of gait, foot form, etc. So we're making product of China for China, and then big brand bold statements, Matt China, Shanghai Marathon, etc. And then I think our biggest after product becomes the marketplace. We have got to reset bigger, bolder, consumer-led Nike concepts that represent the full expression of the Nike brand, have the service and the experience that we expect that'll drive the performance, and the productivity.
China.
The good news is I was over there and I met with Top Sport and with Pao Shen, our two biggest partners, and they're ready to go. So long-winded answer, but I think it all comes back to what we were talking to in both of these geographies. It comes down to product management, it comes down to brand management, and it comes back to marketplace management.
Now we'll hear from Ike Boruchow, Wells Fargo.
Hey, thanks so much for taking the question.
Hey guys, hit that like and subscribe for me. Everything's free. We got an awesome community, and I'm doing all this for you. Hit that like, hit that subscribe button if you are an earnings junkie like myself, baby. Let's go. China.
Relative to the $4.2 billion in expenses of last year, because I know there was the restructuring charge that took out. So just trying to understand the growth up slightly or down slightly is relative to what dollar number? And then just a follow-up to that is when you talked about greater headwinds relative to 3Q, I think that was in the sentence of talking about revenue, gross margin, and demand gen spend. Was the comment meant to encapsulate all three of those line items, or was it really meant for revenue or gross margin or something more specific? Thank you.
Yes, Ike, on your first question, the SG&A guide is relates to the full amount, including the restructuring charge in the prior year. As it relates to your second question, the answer is yes. As I mentioned, these actions are happening, on different timelines across different regions, and based on what we can see today, we think the net impact of these actions across revenue, margin, and demand creation will be larger in the fourth quarter than they are in the third quarter. So the year-over-year impact, as another way to take it, is the year-over-year impact when you compare to the prior year will be more significant in the fourth quarter.
And everyone, that does conclude the question and answer session as well as today's conference. We would like to thank you all.
All right, guys. So we are going to move on over to FedEx earnings, but I just want to give you a quick recap, and you guys can agree with me or disagree with me. Either way, throw it in the chat. Basically, we just had a hype train. We had one of those days where they're like, ooh, we really messed up on our numbers. We're doing bad in Europe. We're doing bad in Asia. We're doing bad in China. We're doing bad everywhere. But hey, we're gonna revamp this. We're going for the sports. We're going for this. We're going for that. It almost sounded sad, like they were begging their investors to realize that they're going to do their best to make a comeback. So right now they're hurting, they're down, they're not doing so well, but right now it's trading at 77.40. It's right where we closed at the end of the day, and that's not a good sign for Nike. Of course, I'm not a Debbie Downer. Of course, I do hope that Nike turns around and does better, but when we look at the overall trend of this, Nike is still sitting right here, folks, at 77.10, where it closed today. And if you look at the overall trajectory, we are clearly on a stage 4 downtrend, trying to create new higher lows. This really needs to hold this 76.50 area in order for it to continue higher. So Ben Fleetwood asked, how are Nike earnings going? Well, they're going horrible. And, we were hoping to see a new stage 2 uptrend start to form here, maybe even get up to this $84 area of resistance, but no. This thing had a very hard time getting out of the gate. After it broke through its trend, it sold right back off. Now, if we go over and look at FedEx, because I think it's very, very important that we look at FedEx, we were sitting at 275.88, and now if we move into that 4 hour, you're going to see we jumped right up into this gray area. This gray area I called out as resistance, and you can see it's trading just below that psychological and technical area of 300. Let's listen in to see if there's anything more going on for these QAs. It may have been over. Here we go.
Weighted, do you think things get better by the time we get to the end of the fiscal year? Just kind of curious how to think about that.
So thanks, Chris. I appreciate the question. So as you know, our prior guidance factored in drive savings as well as the pricing actions that we implemented. However, the expected volumes and related revenue just didn't materialize. Our updated adjusted EPS range, which is in the $19 to $20, reflects our revised revenue expectations. And from a timing standpoint, And while we're not giving quarterly guidance, I can tell you that Q3 will benefit from ramping drive savings, improved top line flow through due to the timing of Cyber Week that we talked about, and continued revenue quality actions. And as Bree talked about, we're seeing encouraging signs from our peak demand. It's important to remember for Q3, though, that the USPS headwind is expected to increase in Q3 and then somewhat lessen in Q4. But that headwind will more than offset the benefit of the Cyber Week I just mentioned. We continue to anticipate drive savings to build incrementally in Q3 and Q4. And from a Q4 standpoint, that is traditionally our strongest earnings quarter of the year, and we expect this dynamic to hold. And that's true despite even having one fewer operating day. So hopefully that gives you some more perspective.
And just
The next question will come from Ken Hoexter with Bank of America. Please go ahead.
Hey, great, and congrats on the freight spin. Obviously, long anticipated and a great move to see in value creation. But my question is, Bree, you talked a little bit about peak season here and how it's shifting into third quarter. Maybe can you give a little bit more color on kind of, you mentioned peak was strong. Is there anything we can read into that in terms of volumes, ability to get price to flow through? I guess I'm more focused on the volumes, both at ground and express. Thanks.
Yeah. Hey, Ken. Great question. So from a December perspective, we are pleased. I will say it picked up right after Cyber Monday. It was a very strong week, and we are, from a December perspective, pleased. Volumes are running ahead of forecast. And as I mentioned, our peak surcharge capture from an absolute dollar amount will be up year over year. So we do think that December is going to be a very strong month. That being said, I do want to talk about our top line outlook for the back half of the year, because we do not necessarily believe that the December performance is going to carry through in the back half. So as we're thinking about the back half top line outlook, we're looking at some improvement. I think you're going to see that improvement come in the form of domestic volumes, in particular at ground. We think that that will improve in the back half. We do anticipate that Q2 was the trough for FedEx freight from a revenue perspective, and that from an international, actually what we think we'll see in the back half is that total volume will look a lot like the first half, with actually some slight softening in Asia. So we're very pleased with December. The execution is going to be great. The capture is going to be great, but we're not yet thinking that this is a signal of more to come in the back half.
The next question will come from Ari Rosa with Citigroup. Please go ahead.
Hey, good afternoon, and congratulations on the strategic move here. Raj, I'm just curious to hear you talk a little bit about kind of how you see the separation playing out. Just if you could talk about what are the things that kind of need to be done to ensure a smooth transition, and then also what are your thoughts on kind of the risk of customer attrition as you separate out the two businesses, and just kind of ensuring that customers aren't confused by the separation, or maybe see it as a risk to their operations, you guys separating out the two businesses. Thanks.
Yeah, thank you, Ari. I think, we are, we decided to separate because of the potential to increase shareholder value for both FedEx and FedEx Freight. As far as, we have put in place, the separation management office with Claude Russ as the head to make sure that we are from here to day one. To the points that you made, as Bree talked about, we have appointed a VP of LTL sales, and we are going to add 300 sales folks in the next year to make sure that we, pay more, directly at, deal with the issue that you talked about. We're also going to continue to improve our customer experience. It's very important for you to note also that that the FedEx Freight company benefits a lot from the association with FedEx. And that association, whether it's commercial, whether it's operational, or whether it's technological, we'll have those arrangements in place as we proceed through the separation. So, I think we'll be able to handle this transition quite well.
The next question will come from Jordan Allinger with Goldman Sachs. Please go ahead.
Yeah, hi. Just curious if you give a little more color around the Network 2.0 rollout, the progression that's planned from here, and given the experience with Canada or any other areas, what do you think's gone particularly well, and what has been the more challenging aspect of it all? Thank you.
Yeah, no, thank you very much, Jordan. I think, we may continue to make significant progress on Network 2.0. We've taken a deliberate approach to roll out, and we're prioritizing service quality. We have optimized 200 stations so far, and including 130 in Canada. And we will complete the rest of the Canada integration early in 2025, with the last major market being Montreal. As a feature of how we roll this out, every time we roll out something, we take lessons learned and when we keep applying into the next one, and that's working quite well. We are continuing to see 10% P&D cost reduction where we have fully rolled out 2.0. So at the end of FY25, we expect to have approximately 250 stations integrated. So hopefully that answers your question, Jordan.
The next question will come from Daniel Imbro with Stephens Inc. Please go ahead.
Yeah, hey, good evening, everybody. Thanks for taking the questions. John and Raj, maybe one on capital allocation and the balance sheet. So first, I guess, how do you envision maybe debt being divvied up, or how should we think about target leverage for each business? And then, John, you've worked hard to reduce the capital intensity of both businesses. I guess, how do you envision capital allocation changing at all? Will this spin enable certain investments you previously weren't making, or how did that change?
Sure. Thanks, Daniel. Yeah, no, we're not anticipating any changes in capital allocation. We're continuing to be focused on optimizing our existing business, ensuring, that a significant adjusted free cash flow is returned to stockholders. That's going to be true both before and after the separation. We continue to have the programs in place. We've already accomplished $1 billion of share repurchases in Q2 for a total of $2 billion for the full year, with a remaining $500 million for the remainder of the year. So that's all going to remain in place. Now, in terms of capital allocation in kind of the post-separation environment, that's all going to be something we're going to be reviewing over the coming months, and look forward to keeping you updated on the progress of that.
The next question will come from Jason Seidl with TD Cowen. Please go ahead.
Thank you, operator. Everyone, evening, and thanks for taking my question. Congrats on the spin. It's always nice to see some value creation out there. Wanted to focus a little bit on the commercial agreements you spoke about. You mentioned the ones that were, with peak help and drayage. How long are these agreements for? And also, what about anything on the bundle side between the two companies? I'm assuming existing contracts that are offered will be honored. And how should we look at the bundle going forward? I'm assuming they'll just go away.
That's a great question. So I think we just need to take a step back and just clarify, what the customer base at FedEx Freight looks like today. So first and foremost, obviously, FedEx Freight would not be the powerhouse that it is today without the incredible strategy to take these three networks together, put them together, put the FedEx brand on them, and then to build off just the incredible relationships that FedEx has with customers. That is one of our commercial strengths, is deep solutioning and partnerships with our customer, and that has really created a lot of momentum. That being said, if you look at the majority of the FedEx Freight revenue base today, while the majority of small customers are bundled, the majority of the actual volume at FedEx Freight is negotiated on an independent contract today. We really made a pivot, I guess, about 4 or 5 years ago, and recognizing that when we were competing in a fragmented market, we had to negotiate the freight business separately. So those contracts will be honored. As you know, the vast majority of FedEx Freight contracts are renegotiated every year. So of course they will be honored as we go through this process. And that's why we are very confident in the incremental focus from a dedicated sales team. It's important to note we have about 75 sales reps today that are dedicated to large accounts at Freight. So this will be additive to them. As we go through the process, we will look at the small customer strategy, and I anticipate that will be slightly nuanced, because that's where we really have leveraged the benefit of the earned discount program at FedEx. There is a common myth that FedEx Freight revenue is diluted because of that bundle, and that is not true. Actually, the way the earned discount program works is that as they ship more FedEx Freight or more LTL, you actually get incremental benefit on your parcel side. So there is some potential benefit for small customer improvement too. But we're very comfortable in our commercial strategy and we can execute it.
I think what I would add to that from a kind of intra-company standpoint, it's important to recognize that through the separate operating companies previously, and as Raj mentioned in his comments, Freight has benefited from providing services to Federal Express. So a lot of agreements already exist that will just be enhanced as we go forward with the separation. So we're not going to have to reinvent the wheel.
FedEx sitting right under 300, 299.99 right now. Like I said, that 300 is a psychological area. If we can break above it and get through this resistance, that's a good sign for FedEx.
Yes, the change in the guidance. So Freight was clearly pressured in the quarter. Is the entirety of the change in the guidance associated with the Freight business? It just seems like the underlying core trends in Express are actually improving. I don't know. If you could just talk a little bit about the dynamic between the two businesses and the changes overall. Thank you.
Sure. Thank you, Connor. So, look, there's a number of considerations. The pricing actions that we've implemented are supporting our FY25 earnings growth assumptions for sure. However, revenue expectations remain constrained due to the demand environment, that largely resulting from the continued weakness in the U.S. industrial economy that Raj talked about. So U.S. premium services, even though there's some, we talked a little bit about peak, but U.S. premium services are expected to remain muted for a while, thereby putting pressure, on op income and margin. We do expect continued growth from our deferred services, which are contributing, but with lower margin and lower flow through to the bottom line. So really, the top end of our range assumes a modest improvement in global industrial production and slight growth in revenue. The low end of the range assumes revenues decline slightly year over year, driven by incrementally softer industrial production and pricing. And the midpoint just assumes flattish revenue year over year. So, we're going to be focused on controlling those things we can. We remain confident in Drive, and those savings will continue to ramp incrementally during the second half. But those are some of the considerations that went into our outlook.
Yeah, and let me just add one other thing, Connor. I think at an overarching level, it's been really surprising for me to see the last 25 months that we are declining ISM for 24. So it's very difficult to say when that'll turn around, and the fact that we have produced such the results, and especially in FEC in this environment, I think it says a lot about what we can do, and also shows to what it can happen when that market turns. But we are assuming that the industrial production and the manufacturing continues to be similar to what we saw in the first half or the second half. And as was stated earlier, 60% of the revenue for the FECs comes from B2B, while 90% comes from LTL. So hopefully that'll help you with the calculations.
The next question will come from Brian Ossenbeck.
Guys, I appreciate you being here. We still have a little while to go on this earnings call. We got a couple more questions to go through. Hit that like, hit that subscribe button if you're a nerd like we are in this community. We love everything that has to do with the stock market. You're in the right place. Hit that like, hit that subscribe.
A trade down necessarily, but it does sound like the deferred side of the business is growing faster. So just want to see if you can offer a little bit more comment. Sounds like the demand surcharge is sticking, but what about the other ones that you've put into place to help optimize the network and sort of get that revenue management moving in the direction that you would want? How are those sticking, and how would that progress from 2Q into the back half of the year? Thanks.
Hi, Brian. Great question. So the market certainly is competitive. I do feel that it's rational. From a pricing strategy, as we think about the yields in the back half, they are going to remain pressured. That is a function of two things. One, the economy, and two, to your point, there is a mix change. I do want to emphasize that we do have some customers trading down. We're also, as we go to acquire new volume and customers, because all of our customers are simply trading less. In a downturn, you need new customers to be able to add to the portfolio. And so there is growth in new customers in the deferred portfolio. From a pricing strategy perspective, I think the team, despite the economy, is executing really well. The pressure that we're seeing is on the base rate, and then weight. We know every time we're in a downturn, weights are pressured really across all the portfolio, but especially in the freight portfolio. And so there's not a lot that the team can do from a weight perspective. What they can do is be really disciplined in getting the surcharges, especially those surcharges that drive a disproportionate amount of cost. So peak is a great example. They're executing on peak. From a large package perspective, nobody moves large packages better than we do. And actually, we're seeing that part of what we're seeing in December is a lot of flow through from a ports perspective. As you heard, not only are we being disciplined from a large package capture on surcharge, but the dimensional capabilities that we're putting in to get capture is increasing it. And then from a rural perspective, we have the best value proposition here in the United States into the rural markets, and that matters for a lot of our customers. You know, the last 3 or 4% of their volume, they don't want to have to use a different provider. And so we're really being disciplined on getting those surcharges. They are contributing, but the base rate is really pressured because of the economy. I hope that helps.
The next question will come from Brandon Oglinski with Barclays. Please go ahead.
Hey, good evening and congratulations on the spin. I know a lot of your shareholders will definitely be happy here too. But I guess, Raj, can you expand on, what you're doing differently under Drive? You spoke about how it's, driving the way you do business today versus what you did yesterday, and especially in the context of revenue quality, which I think Brie has mentioned many times, and maybe even reflecting on, losing your largest customer, but it looks like, your margins have actually come up. So what else in the portfolio potentially can you change looking forward?
Okay, I'm trying to digest that question, Brandon, but let me just start with Drive firstly. I think, Drive has clearly evolved to be how we work in this company. We have established a overarching market-leading approach to overall governance that leads to disciplined execution. And, it's a data-driven approach and very rigorous and very timely decision-making and ultimately leads to much, much better execution. So this is going to stand us in good stead as a foundation for FedEx to execute as we go forward. The second thing is we also adopted a data-first digital mindset in solving problems while creating differentiation in our service offerings. The underlying technological innovation and transformation that we have created is quite profound. And those are the two things powering our execution. And that's also why, as we've changed, our vision to making supply chains smarter for everyone, it starts by making our own supply chain smarter. Of the $4 billion of Drive savings, I think roughly $1.8 billion would be directly the result of the new technologies that we have put in place. So that's what Drive is all about. And as we look at what comes next, whether as we implement Network 2.0 or whether we improve and expand on Tricolor or expand our operations and expand our performance in Europe, all those are going to be guided through Drive. And that's what gives us the confidence of execution. I hope that answers the question that you asked.
The next question will come from Bruce Chan with Stifel. Please go ahead.
Hey, good evening, everyone. And, echo the sentiments on the spin. Great to see. Maybe
just
somewhat
above
of an oblique
300 now
follow-up here to
for
Brian's
FedEx,
question.
looking
There's
good.
been some suggestion of a USPS privatization. Maybe we could get your thoughts on what that would mean for the competitive environment. Is that, a new bona fide competitor, or is that maybe introducing a more material profit mandate and thus, making the postal service more rational? So, any thoughts and color there would be great.
Well, it is very early for us to comment on something like that. We will keep we'll monitor the developments there very closely, obviously. But one of the principles that I think it's important to state here is for our industry, it's important that the package delivery business is not subsidized by the U.S. taxpayer. I think that's a very important consideration set, and hopefully that'll be what will get adopted here.
The next question will come from Jon Chappell with Evercore ISI. Please go ahead.
Thank you. Good afternoon. Brie, I was hoping to ask about tariffs. It's a narrative that seems to be dominating some of the sentiment around the group right now. You're in a much different cost structure than you were in the first Trump administration. So just as it relates to tariffs, have you heard from your customers about any pull forward? And I guess secondly, how would you manage your network if there were to be a surge in demand that may be more of like a short term as opposed to a long-term secular shift?
Yeah, it's a great question. So from a December perspective, there might be a little bit of a pull forward. As we talked about, we are seeing some movement both in the freight network and in the parcel
FedEx
network
is below 300.
From the ports. So there might be a little bit. It's hard to tell right now because we're in the middle of peak, how much of that is inventory as well as how much is just consumer demand. So obviously it will be much clearer in January. From a reaction perspective, I am really pleased with how quickly the airline team is able to respond right now. To Raj's point, we are doing things differently with Drive. So as far as being able to adapt, I'm very confident. As Raj has shared many times, we're everywhere. We have customer relationships everywhere. So as customers prepare to pivot, we're there to pivot with them. So, it's very hard at this point to predict what might happen under a future administration. So we're not going to try to, but we are ready to respond with agility.
And John, let me just say that, as you can imagine, we are a referendum on global supply chains every single day, and especially of the high-value economy. And we see this information from the bottom up. And the fact that we have a scaled network already in place that connects 99% of global GDP is a significant advantage because we can move our capacity much, much quicker than manufacturing can move. And so we are very agile, much different than what used to be the case before. And that's one other thing I would say is that you can imagine that as part of our value proposition is an end-to-end delivery. In international, that includes customs clearance. So we have the data, the expertise, the insights about what it takes to move package from one country to any other country and all the commodities they're in. So this becomes a competitive differentiation advantage for us as we make our customer supply chain smarter.
The next question will come from Scott Group with Wolfe Research. Please go ahead.
Hey, thanks. Good afternoon. John, you said a couple times that the post office headwind is bigger than the Cyber Week tailwind, but there's a lot more moving parts. And so maybe can you just clarify what you're trying to sort of communicate around Q3 expectations? And then on the LTL spin, I just want to understand a couple things. Why is it 18 months? Seems a little long. And then as we do our math, is there any way to just think about if there's much, if any, of the corporate unallocated costs that we should apply to LTL? Thank you.
So thanks, Scott. So let me start with the 18 months. From a timing standpoint, the 18-month period for a transaction of this magnitude is really consistent with what is reasonable to expect. And we do look forward to keeping you posted on our timing and milestones along the way. So we'll look forward to keeping you posted there. With regard to the Postal Service, as I mentioned in my remarks, we are on track to take out cost as planned with the U.S. Postal Service contract expiration. We talked about the flight hours taken out. Roughly 60% of our U.S. domestic daytime flight hours have been taken out, and that makes up about 24% of our total daytime hours. We're also going after all the other related costs. So, as I mentioned in my remarks, Q3, will be impacted because it'll be a full 3 months of impact from the Postal Service contract, and that'll start to wind down in Q4, and we'll start to see it as a tailwind into FY26. So, that just gives you some background and perspective. We're pleased with the work that's been done. There's more to be doing in taking that cost out. But hopefully that gives you some good color on the Postal Service.
The next question will come from Tom Wadewitz with UBS. Please go ahead.
Yeah, good afternoon. Thanks for getting me on for a question. I appreciate it. Let's see, on the LTL, and thanks for all the detail on this spin. It's complex, but it's helpful to hear your thoughts. Raj, would you anticipate that you get somewhat more volume focused with LTL in the future. You talked about the 1,100 basis points of improvement in the margin over a period of time. And I think that was driven by some of the change in focus on pricing and a lot of discipline. I'm wondering, would you anticipate that, hiring a bunch of salespeople, focus on SMB, those things, would you potentially be more volume focused and maybe compete harder for freight in the future, or is that the wrong way to look at it? Thank you.
Hi, Thomas, Bree. So I think first in the main, we're really pleased with the discipline that we've got across the team. From a revenue quality perspective, we've made great strides. As we look forward, we do see this as an opportunity to play offense. We are going to invest commercially in new salespeople. We know we've got an opportunity from a different industrial mix. And as I mentioned earlier, from a weight, while our weight is down right now in our base because of the macro, when we look competitively, we think there is some opportunity using technology to fill up the capacity. We know the FedEx Freight network right now can run very comfortably at 100, 105. So we've got some opportunity to be a little bit more strategic, also to look at the 3PL market. So the answer is yes, we're going to play more offense, and we think there's some great things to come.
The next question will come from David Vernon with Bernstein. Please go ahead.
Hey, thanks for fitting me in here. So coming back to Network 2.0, I think, Raj, you mentioned like 225 stations would be consolidated or something like that by the end of, I think it was fiscal 2025. Can you give us a sense for kind of what percentage of volume you might have touched with the Network 2.0 integration to date? And then as you think about the timing of when the more difficult to tackle major metros may start to be coming in play. Is this a fiscal 26, fiscal 27 sort of timeline? Just trying to get a better sense for when the rubber really starts to meet the road, so to speak, on the physical integration of the courier operations in the heart of the domestic network. Thanks.
Yeah, thank you, David. The FY25 number is 250 stations integrated. I think the big lift is going to be in FY26. So we have FY26 and FY27 are the two big years, but FY26 will be the big lift for us for Network 2.0.
This concludes our question and answer session. I would like to turn the conference back over to Mr. Raj Subramaniam for any closing remarks. Please go ahead, sir.
Well, thank you, operator. In closing, I'd like to thank our team members for delivering this outstanding.
All right. So just to kind of recap on what's going on here, you guys know I love that technical analysis. You know that I absolutely have to get me a good dose of that technical analysis. And one thing I like having in front of me now, please don't get me wrong, we're on the 1 minute time frame. It's a-okay though, just hear me out. What you see here, when you find these on larger time frames, these high, tight flags, this is what we look for. This is beautiful. I love this. I'm attracted to this. And you see this a lot on the 1 minute time frames. But you got to understand it's a lot stronger on the 5, on the 1 hour, on the daily, and then, of course, on the weekly. And when you find these high, tight flags and they resonate across the time frames, you'll find that you'll get a tasty little trade with amazing risk reward. So look at patterns just like this. What's going to happen here? I don't know. But what I can say is I've identified the resistance or supply zone. Okay. This is where the resistance and supply zone is. We identified this before it ever came up here because what do? We zoomed out. We go to the daily here and we see right here is your resistance area. Okay. There's a lot of shares being held in this area, a lot of supply being sold off into this area. So, of course, when we zoom in and we see these areas, need to fix this tool here. When we see these areas, we're looking to see if it can hold these gains. That's why the question I asked you guys, 13 voted. Yes, 69% of you said yes, FedEx will hold these gains. 15% said no, and 15% said you're just here for the show. Thank you so much for being here. If you guys are loving this at all, if I'm bringing you any form of entertainment or education, that is my job, and I do it all for free. If you can get behind that and you want to join a community, all you got to do is hit that free subscribe button. Do it now. You'll love it. You'll like it. You'll love it. Anyway, guys, This has been an absolute awesome area. When this comes in here, it starts to sell off. If it can hold these new higher lows and we do a good job keeping an eye on it, we might have a tasty little trade coming up. Last but not least, we need to revert to the mean and check out Nike, because Nike had a big push up here, big push up much higher. This red area is its downtrend. As it came up through that trend line, you've seen it started to sell off, and then it hit dang near right where we have closed. And if we zoom out in that sense, just to recap this, we are in a huge downtrend. So FedEx, huge uptrend and holding areas of a new high, where Nike is stuck in this continuation of a downtrend here. We are starting to see some more volume pop up in this area, but it still needs to prove itself. So Nike, can you hold out? Can you stay above the 76.50 area? It's very pinnacle. It's very important. So we're going to see what happens there. Guys, you know I love earnings. You know I love being here with you. Thank you guys so much. If you made it this far, you are the real ones. If you made it from the start, I know a few of you already in here are still here from the very start. You're the real ones. I really appreciate you guys. And of course, if you have left a comment at all during this double earnings call that we hit for both Nike and FedEx, if you made it all the way through and you're still here, I'm going to give you a shout out right here at the end. It's what I like to do. It's a way I can give back to you and say thank you for being here with me, because I love nerding out on all of these. And of course, yes, Merry Christmas to each and every one of you. Be Stewies hitting me with the Santa Claus and the Mrs. Claus in the chat there. So we're going to end this poll. 69% of you said the FedEx would hold these gains. I'd like to see it hold these gains. But Nike, womp, 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 not doing very good. Jimmy Bright says, thanks, Dave. Good night, everyone. We are going to give you the outro and then wait for the rip tater chip so I can say goodbye, baby. Man, I tell you what, I want to give a huge shout out to B. Stewie. He encouraged me to continue to do earnings. I want to show I love everything that has to do with the market, and it's awesome, a blend of having some fun before we get serious. We can hang out, we can talk about different tickers. Bada bang, bada boom. You'll be making running real soon, B. Stewie. Thank you. I appreciate you. You've been here from the start. You're awesome. Of course, I got to give a huge shout out to Dan Bob, Dan, the greatest moderator alive, stepping on in here and always taking care of business and always taking care of everything in the background. If you guys want to join an awesome Facebook page that he moderates, join our Facebook group. Definitely go check that out. Yosef, you're the man, dude. Have you been here from the start? Holy cow, dude. Jimmy Bright, love you, buddy. Thank you so much for stepping in, saying hello, B. Stewie. Take care. I'm going to say the same names a bunch of times. IKEA Zayat. If I'm saying that right, I feel like I did a good job. IKEA Zayat. If I said your name right, I mean, give me a subscribe just for trying that one out. Come on now. Ben Fleetwood, thank you for stopping in. Thank you. I appreciate you being here. Moon Machine was here, and boy, he was fun to chat with. He had some ideas, and going through all the Nike gear. I mean, there's some cool stuff, but yeah, there's a lot of some weird stuff out there. What's up, Yellow? Thank you so much for stopping in. Evan Shark, thanks for stopping in. I didn't know we had sharks in here. FedEx call sounding. What's the FedEx call sounding like? Well, I hope you got a piece of that action there. Jeff Lee stepping in, saying he won or he lost some. We won't disclose the full amount, but goodness gracious, if that's real, I hope you're doing okay, and I hope it's still only 8% of your account, let's say, because if you're losing 35K and it's only 8% of your account, you're still doing better than most everyone in America. So yeah, give you that one. I'll let you take a piece of that. I hope it's only 1% of your account. How about that, brother? I see you shooting all the love my way. It's sending right back. You guys are awesome. You guys are the real ones. JD Hunt, thank you so much for being here with me. Sweet Zamora. Giovanni Lazaro, thank you so much for stopping in. Z-Bowl, man, we had a lot of people in here today. What a great show. And No Efforts AI videos. All right. I hope you guys had an awesome night, because I Sure as hell did. Peace, guys. We'll see you on the next one. We'll see you Sunday. Peace.